A minute to go until the start of cash equity trading. I'm Francine Lacroix in London with Tom McKenzie.
And here are your top stories. Inflation fears. Stocks and bonds drop before key US CPI data today. Chinese price growth hits a 2-year high. The big sell. The world's richest man, Elon Musk, offloads nearly $7 billion of Tesla stock in case he's forced to buy Twitter. Plus, collapsing demand. Micron is the latest chip maker warning that business is rapidly crumbling.
Tom, let's take a look at the futures. It's all, of course, about that CPI. We're seeing a bit of caution across the board with the FTSE 100 futures, the DAX futures down some 0.2%. The focus, of course, is also on the Treasury yield curve. There has been an inversion. Does it still mean recession? No. I know our Mark Cudmore is all over that.
Yeah, he's going to detail that for us, as you say, a 50 basis point gap now between the 2s and the 10s when it comes to that inversion. CPI, of course, it is all about that when it comes to these markets. As you look ahead to that number out later today, our own Venram from the MLive team suggesting if that number comes in hot, and of course the estimates are for 8.7% down from the previous month, but if it comes in above that estimate, then maybe the case is made for the Fed to come in earlier with an unscheduled meeting and an unscheduled hike. Of course, the expectations are currently they're going to get 75 basis points in September, but the number today could, of course, upend those estimates. The FTSE 100 currently down by 0.2% as the UK considers potential scenarios that could look like blackouts in the winter on the worst case scenarios, of course, in terms of those energy shortages. The German DAX currently down 0.3%. Over in France, the CAC current lower by 22 points or 0.3 as well. The Spanish IBEX down by 12 basis points just in the first few seconds. Let's look then, following what we've seen, 3 straight days now of losses across the S&P stateside. And again, it was the semiconductors and the story around Micron, building on what we heard from NVIDIA, AMD I should say, and Intel, in terms of what we're seeing when it comes to that demand for chips, starting to weaken and question marks about that, what that means in terms of the broader economy and the demand picture as we weigh up those recessionary concerns. The flip side of that is, of course, it could be a positive when it comes to those supply chain constraints we've been talking about for the last 18 months or so. Futures stateside pointing to losses of 0.2%. The pound, just pulling this out for you as we weigh up again, that scenario being mapped out by the British government around potential blackouts over the winter period. 120 on the pound, potentially further pressure on sterling going forward. 2s currently at 3.25. Mark Cudmore's going to break this down for us. Not a great deal of movement, but again, it's that inversion that is getting our attention today once again. Brent at $95 a barrel. That is down by 0.9%. Fran.
The inversion, let's get over to our Bloomberg MLive managing editor. He's Mark Cudmore. Mark, you're looking at the 2-10 Treasury curve today. Is it different this time round?
Good morning, Francine. I feel like you and Tom have been very kind, built me up, and set me to fail here and disappoint with those expectations elevated.
Never.
But the 2s, 10s, what is it saying and what does it signify? So, for the 35 years, or basically for every time up to the pandemic, if you want the 37 years between the early 80s up through to the pandemic, for every recession, the yield curve inverted an average of 18 months before. Now, that's really, really important. It inverted the first time 18 months before. I'm going to ignore the one false signal in that period, which was 1998, which came a few years earlier. The recession eventually came then when the curve was actually re-steepening. So you can see in all these periods, the recession was never when the curve was actually inverted. And that, again, happened during the pandemic, but that's a slightly different scenario. So you do not normally have a recession when the curve is inverted. You actually have the recession when the curve is back steepening again. And this makes sense intuitively. However, there's a few things I want to point out. This was in a world of low inflation. We're now back to the world in the 70s and 80s. Now, back then, the curve inverted long before the recession. But rather than a little bit of an inversion and then a back to steepening, and that's when you get the recession, in fact, we kept on inverting much, much further, and that's when we got the recession, when we were much deeper in inversion. And I think because we are back into that high inflation world, that's what we're going to go to here. So I think that ultimately, we're going to see we're at minus 48 basis points today. Bank of America are talking about minus 85 basis points. My colleague said 65 basis points is very easy. We should get there in no time. I think we're going to go to 100 basis points plus over the next year. I think we're going to invert much more deeply. Now, the next thing is the lead time for the recession. As I said, for most of the past 4 decades, it was about an 18-month lead time, which would point to a recession middle of next year. Fits my theory, but I do think the cycle has got shorter. And in fact, there was an inversion before the pandemic, a very tiny one that you probably can't see in your charts, but it was there. And the lead time has got a little bit shorter. So I think that the 2s-10s curve does still have value. The problem is your benchmark is not this 4-decade period. It's the earlier period that you can see here, and we're going to get a much deeper inversion. It is saying recession's coming. It's saying recession is not happening now, but a recession coming in 2023.
Okay, Mark Codmore, the importance of that lead time between the inversion and when recession actually hits, of course, Bloomberg's MLive managing editor. Thank you. And of course, it is a big day for eco data, as we flagged. Traders are counting down to that latest US inflation figure. Meanwhile, in China, the July CPI print came in at 2.7%. It was below analysts' estimates, but pork prices very high indeed. For more, we are joined by Bloomberg's Simon White. Simon, what are we expecting then from US inflation today? The estimates of 8.7%, but of course, there have been a number of months where the estimates have got it bang out wrong, essentially.
It's been a lot stickier, I think, than most people have realized. But most of the leading indicators that I look at are saying that really this is now the time where it should start to roll over. I think the thing to watch is the transport component. A lot of airtime is given to the shelter component. Actually, that's only contributing about a third or maybe a quarter of CPI right now. It's the transport component that's contributing almost half. So I think you want to pay close attention to that. And we'll see, obviously, the numbers today, how much that's contributing.
It's quite exciting. Happy CPI day, everyone. Now, China's July also figures CPI rose 2.7%. Simon, how significant is this reading?
So I think that's really interesting. I mean, it may end up being a damp squib, nothing to it, but it may also be a bit of a black swan. And obviously not literally a black swan, because we wouldn't be talking about it. But for China, I think it's very important because if CPI does keep rising, I mean, bear in mind it was at like 0% at the beginning of 2021. We're now at 2.7. And if it does keep rising, I think that has potential big implications for China. China basically represses its household sector, which is why it manages to run such massive trade surpluses. And if you've been watching the trade numbers, the trade surpluses just keep rising and rising. Normally what would happen is if you have a trade surplus, you stimulate the rest of the economy, you actually stimulate imports as well. So the actual trade difference shouldn't grow. But the trade surplus keeps growing and growing. If CPI keeps rising, China at one point might have a wage price spiral, and that would be a major issue for China, which would possibly cause, a potential devaluation in the yuan.
Simon, thank you so much. As always, a resident mathematician. He's, of course, part of our macro strategist team, and he has some really great stories out. I think the last one was looking at, is this a bottom? A market technician says maybe. Bloomberg's Simon White. Now let's get straight to Bob Parker. He's advisor at CBP, and he joins us now. Bob, happy CPI day. We haven't been this excited since, last month, CPI data? I mean, what are you expecting from that CPI figure, and what are you expecting in terms of clues from what the Fed will do?
I think the theme is that CPI in America is in the process of peaking. So last month we had year-on-year CPI headline as 9.1%. The consensus today is 8.7%. I think a figure sort of plus or minus 8.7, perhaps just under 9% is likely. So I think thesis number one is we are peaking. I think thesis number 2 is, however, and this is the bad news, is that the rate of decline in inflation, at least for the rest of this year, 2023 I think is a different story, but for the rest of this year, the rate of decline in inflation is going to be very slow. So, you know, we could all be having this discussion perhaps in 3 months' time in November, and inflation is still running at sort of 6 or 7%.
So the base case for you is you get below 9% probably on the CPI print later today. If we get a blowout number again, it's happened before. Building on what we saw from the NFPs on Friday and those very strong jobs numbers stateside, does that make the case potentially for an out of schedule meeting and decision by the Fed? That's something that Ven Ram from my own line team has flagged as a potential, as a possibility to get a grip on this, to front load these rate hikes.
Well, I think you've got a very clear message from the Fed, which is that, you know, first of all, to some extent, they're embarrassed that last year they were very slow in addressing the inflation problem. And the message from the Fed is that today they want to aggressively rein in inflationary expectations. So I think very clear guidance from the Fed. Now, if you're right and say we do have a blowout number, and let's define a blowout number as 9% plus, and that would be defined by anybody as you know, significantly worrying, then there is a chance that we would have an unprecedented, unusual Fed meeting.
So there's no chance. What you're saying is that that inflation or deflation will come as quickly as inflation came.
I think the risk of a sharp decline in inflation is very low in 2022. I think in 2023 we may see much better inflation numbers, but certainly I'm afraid the inflation numbers are going to be worryingly bad for the next 3 or 4 months.
And what does your experience, Bob, tell you about the yield curve inversion and the timing? And Mark Carbon was talking about this, that lag between the inversion and when recession hits.
Well, I think it's very difficult comparing current circumstances with previous recessions because, you know, if we look, let's say, at the recession of 2000, 2001, and then the recession in 2008, 2009, then we had very deep recessions, you know, a major contraction in economic activity. I don't think that's the case this time. Yes, we're going to have a recession. We could have a sustained period of very low economic growth, and that's certainly consistent with forecasts from the IMF and the Fed themselves for next year. So, you know, that implies that, yes, we're going to have an inverted yield curve, and certainly if the Fed funds rate goes to, you know, close to 4%, it's entirely possible that we could see, you know, 10-year yields around current levels.
So how awful can the recession be? So we have a great, I mean, I read John Authers, I wake up and I think, right, what clever indices is John Authers looking at? And he says, look, there's something really missing from the bond markets, no matter what the CPI tells us. And it's term premium, it's also liquidity. Like, do you worry about the current state more than the markets are?
Well, if we compare today with previous major recessions, you know, and I mentioned 2000 and 2008, then we had significant over-leverage in the system. In 2000, it was the corporate sector which was over-leveraged. Obviously, in 2008, you know, it was the shadow banking sector. It was the banking industry which was over-leveraged.
Which we didn't know at the time.
Which we
did not know at the time.
Which we should have known at the time. Today, we don't have that over-leverage in the system. There are pockets of over-leverage, but it's not as bad as it was then. That's why I think we will have a recession, but it is going to be very mild. So the thesis next year for the States is probably close to zero growth, a minor negative. Likewise, Europe possibly slightly worse, but we're not looking at the sort of major recessions that we had previously.
So Bob, where does that lead you in terms of allocation?
I think the first point to make is that we've had a major sell-off in high-yield, emerging debt, and investment grade. I think there are problems in the high-yield market, particularly in the lower end of the high-yield market. But I think that sell-off in the investment grade corporate bond market represents a buying opportunity. That was the case in July. I think it is still the case. I think a word of caution on global equity markets, because we've had a good rally in July and early August. I think that's now running out of steam. So I think a move to a more defensive position in global equity markets makes sense for at least the next month or two. And we still face those big headwinds. And yes, there is an outside chance, and I emphasize the word outside chance, of an emergency Fed meeting.
Okay.
So we do have headwinds. So I think a more defensive, high dividend posture in global equity markets. Commodity markets, I would actually stand back from at the moment.
Would you? Kalanovic, of course, JP Morgan coming out and saying, get exposure to commodities, given the sell-off we've seen.
Well, yes, we've seen a big sell-off in metals. We've seen a big sell-off in soft commodities. Metals, I think probably we are close to a base if you look at sort of nickel and aluminium, copper. But I question, in a weak economic environment, whether we're going to see that demand-led rebound. I don't think that's going to happen. You know, we need to have a discussion about energy, but that one has to make a very clear distinction between gas and oil.
Okay.
But I think the case for commodity investment was very powerful 2 to 3 months ago. Afraid less so now.
Less so now. Bob Parker, always excellent with your insights. Thank you very much for coming to the studio, walking us through what you see in these markets, staying defensive, but maybe opportunities around investment-grade credit over in the Asian space. Bob Parker, advisor at CBP. Coming up, blackout. The UK could face several days without power this winter. That would be under the government's worst-case scenario. We'll get into the details next. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
As you look at the company you've created, how do you think you're having an impact on the world for the betterment of the world?
We are by far and away the best positioned entity to solve the question as to what does the human genome mean and how can you apply it to individuals.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Happy Wednesday. Welcome back to The Open. We are 16 minutes into your European trading day. Losses across European equities of around 0.2% after a modest sell-off yesterday. Futures stateside also lower by about 0.1%. Let's get to one of the corporate stories then and what it tells us about the global economy. Micron, the leading US maker of memory semiconductors, has become the latest chip maker to declare that demand is falling off rapidly. Speaking to Bloomberg, its CEO warned investors that revenue will not meet projections, sending chip stocks tumbling.
Due to the macroeconomic uncertainties, as well as due to high levels of inventories that customers have built across various end market segments for us, those inventories are being adjusted down, and that is what is resulting in reduced demand for us.
Okay, let's bring in Bloomberg's chief Asian economics correspondent, Enda Curran, then, for a macro outlook and what the semiconductor calls tell us about the softness in the global economy. What does it mean? What is your read into this, Enda? The call, the warning from Micron, and what it tells us about global demand?
So this warning from Micron echoes warnings from other semiconductor makers also, Tom, and it speaks to the idea that this global technology boom is fading fast. The demand among consumers for home computers, for new mobile phones, for all the technological gadgets that we used during the pandemic's early days in the whole work from home phase, etc., that demand was a huge driver of the global recovery, especially for exporters out of East Asia, for example. But now clearly it is fading, and it seems to be fading quite fast. Now, not every company in the space are making these warnings, but there does seem to be a consistent thread coming along now that the demand for these kind of technology items is coming off the ball. And it won't just impact exports, by the way. It will also impact some of those big capital investment plans that these companies had made. Remember, governments around the world suddenly discovered they couldn't get enough semiconductors. They were encouraging companies to spend billions on capex. So it does suggest that perhaps we're in a slowdown in the tech cycle, and that will have consequences for the global growth too.
So, Enda, this is what we're trying to figure out this morning in the newsroom, is how much is this an industry actually story, a semiconductor story, and how much does it add to views that the world is also heading for a steep slowdown?
Well, there is a view out there, that some of the big demand last year was driven by companies building up their inventories of these chips. I mean, I speak to manufacturers out here, and several of those people last year were telling me that they were buying maybe twice the pace of chips, for example, to build up when they could get them. So that does suggest that partly what could be going on could be an inventory story and less about a global demand story per se. But nonetheless, when you look at it on the broad, you would have to say it's another indicator that consumer sentiment around the world is softening. We know that's happening because of the inflation story and because mortgage rates are going up on the back of what central banks are doing. There clearly are positives out there. I mean, the US payroll data last week didn't speak to a recession in the US, for example. But the IMF have warned that the world is teetering on the brink of a recession. And if we get a few more warnings like this from the technology sector, it will copper fasten the view that consumers are tightening their belts.
Enda, thanks so much. Enda Curran there, Bloomberg chief Asian economics correspondent. Now, in other news, the UK planning for several days this winter of possible organized energy blackouts for industry and households. Bloomberg has also learned that the government's reasonable worst-case scenario could actually see an electricity shortfall totaling about a sixth of peak demand. Well, let's get more with Bloomberg's Anna Shivraskaya. Anna, what circumstances would actually lead to these blackouts?
Indeed, several factors have to come in together for that reasonable worst-case scenario to materialize. First of all, you have to see much below normal temperatures in January and reduced power imports from Norway and France. And also a lot depends on what's happening on European and global gas markets. Because the UK is a big importer of LNG, but also if it's cold in Asia, these LNG cargoes may divert back to Asia, leaving less for Europe and the UK. And also it depends on levels of Russian gas supplies to Europe, only because the pipelines from mainland Europe to Britain operate in the import mode. So basically, in cold weather, Britain will depend on pipeline imports from Belgium and Netherlands. And these countries, in turn, in part depend on Russian gas supplies.
Yeah, and all of this, of course, Anna, happening at a time when the impacts and the fallout from the climate crisis is just becoming more and more evident. And we're seeing that across the continent in Europe, the impacts of the heat wave that continues and the low water levels, particularly in the Rhine, the implications that could have for supply chains there. Walk us through what is happening and what it could mean for shipping commodities across the continent.
Indeed, the Rhine levels are getting so low that essentially might conversion impossible already on Friday, and that's definitely exacerbating the energy crisis in Europe, just because the river is used for this main artery for flows of commodities with coal, diesel, oil products to Europe. And in terms of the diesel markets, already we are seeing shortages and dwindling inventories, and obviously low Rhine levels do not help replenish this inventories ahead of the winter, ahead of next year, when also Russian ban on seaborne oil imports comes, of course, in February.
Okay, Bloomberg's Anna Shirayevsky there walking us through the impacts of that heat wave in Europe. Thank you. Coming up, I need the money, Elon Musk.
Me too, Tom.
Really? Does he really? Elon Musk offloads almost $7 billion of Tesla stock, maybe giving some of it to Fran, in case he's forced to buy Twitter. We'll get you the details next. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a gray zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open, everyone. 24 minutes into the European trading day. A bit of pressure across the board. Just the DAX is flat, but on the upside, again, inflation expectations. This is what's driving everything. It's U.S. CPI day. It's a big, momentous day, and it could give us clues of what the Fed does next. Elon Musk says he needs the cash. The world's richest man has sold nearly $7 billion of Tesla stock in case he's forced to buy Twitter. Well, Bloomberg Quick Takes. Alex Webb has a story. Alex, I mean, this is amazing. Like, every day there's a good Elon Musk story. Why now?
Look at the share price. You know, it's up in the sort of 800s again. At one stage, it was down close to 600. So if you're thinking there's a good chance you're going to have to pay some money, he clearly doesn't want to sell down too much of a stake, so this covers him in that instance.
What does it tell us about his views on this eventual deal? Of course, they're in the middle of this legal wrangling. Are we starting to get the sense that maybe he's accepting that he's going to have to buy this company?
It certainly seems that he will have to pay perhaps a settlement, and that's been estimated as high as $10 billion. So it does infer, you can infer a little bit from that. You might also infer something about where he thinks the Tesla stock is going to go. Maybe perhaps not as positive as others might have you believe.
Okay, Bloomberg's Quick Takes. Alex Webb very quickly walking us through that Elon Musk story, of course, always excellent. Thank you on the sale by Elon Musk of that Tesla stock. Coming up, Vestas earnings are out and it is a miss. We're going to speak with the CEO of the Danish wind turbine manufacturer next. All about input costs, supply chains, and of course recession risks, whether or not they can navigate this and how they're able to pass on those prices. And of course, during this switch and this focus on renewables in terms of these energy constraints across Europe. Currently, your European market's pointing lower by 0.2%. Futures stateside, S&P E-minis down just a couple of points. Nasdaq futures lower by 0.2%. Of course, the semiconductor picture pointing to weakening demand, and that weighed on US stocks overnight. Stay with us, plenty more ahead. This is Bloomberg.
most fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably couldn't spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business and fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, of the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
Names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Inflation fears of stocks and bonds drop before key U.S. CPI data today, while Chinese price growth hits a 2-year high. The big sell, the world's richest man, Elon Musk, offloads nearly $7 billion of Tesla stock in case he's forced to buy Twitter. Plus, collapsing demand, Micron is the latest chip maker, warning that business is rapidly crumbling. Tom, if you look at the markets, though, they're kind of range-bound. You just want to know what inflation in the U.S. looks like.
Absolutely. So the forecast is for 8.7%. That compares to 9.1% the previous month. But of course, we know this. I don't need to remind you, the economists have got this wrong on inflation. Bob Parker of CBP telling us earlier, if you get 9% or above on that CPI print, it could lead to that unscheduled meeting from the Fed. And that decision, of course, the next meeting is scheduled for September. Will they have to bring that forward if you get a hotter than expected CPI print? Again, the estimates for 8.7% down from the previous month. That data point out later today. It is a bit of a holding pattern across these equities and these markets. Currently down 0.1% on European equities after the losses, modest losses yesterday. The DAX is up, though, 0.2%. The FTSE 100 down by 8 points, currently at 7,400. You have seen a bit of upside, though, about 4% in the last month for UK equities. We have the politics, of course, but also the government outlining plans. Worst case scenario, you could get planned scheduled blackouts during the winter period as we adjust, of course, to the shocks around the energy crisis. Let's switch it on, see how things are playing out sector by sector then. Currently at the top of the list, insurance gaining by 1%, autos and parts up 0.5%. At the bottom of the list, it is technology. Not a big surprise there, given what we saw in the semiconductor space yesterday. Just Micron building on that picture that we saw from NVIDIA and also Intel on the suggestion that you're seeing that weaker demand. They said that, outlined that, Micron. They're seeing weaker demand for their chips, again, as an indication of this slower growth picture. Currently, across technology, lower by 0.6%. Also worth reminding you that inversion between the 2s and 10s, about 50 basis points, again, is an indicator of recession risks. Let's look at some of the individual companies on the move then. We continue, of course, to work through the earnings for the second quarter. It was a beat for ABN AMRO. Also, they lowered their provisions as well. So some optimism coming through and investors liking that story. Currently up almost 4%. Not a big benefit, though, from the higher rates environment compared to some of their competitors. Ahold Delhaize, this was also a beat. Currently up, look at that, at more than 7%. Also putting a pause, suspending their plans for an IPO of Bol.com, that e-commerce company. Vestas, we're going to be speaking to the CEO just in the next few seconds. That stock up 4%. They are maintaining their forecast for the full year, despite those higher input costs and, of course, supply chain challenges. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Elon Musk has sold $6.9 billion worth of shares in Tesla, the first time he's sold the stock since dropping his bid to buy Twitter. The shares were sold on Friday of last week. Musk has now offloaded around $32 billion of Tesla stock in the past 10 months, but now says he's done selling and will buy Tesla shares again if the Twitter deal does not close. Coinbase posted a $1.1 billion loss and lower than expected revenue as the largest U.S. cryptocurrency exchange was battered by tumbling digital asset prices. Coinbase has slumped 65% this year in what has been labeled a crypto winter. Revenue declined to $808 million, missing the average estimates, while Bitcoin's share of the trade increased to almost a third.
I think it was a rough quarter for most companies. In the crypto space, we obviously had some big episodic events that happened during the quarter. And so some of those asset prices shrunk, which then impacts things like the assets on platform and other numbers.
Cryptocurrency exchange Curve Finance appears to have been hit by a security incident. Curve, seen as one of the most important projects in decentralized finance, tweeted that an issue had been found but was then reverted. It also suggested that attackers stole about $500 million in funds. It said an investigation is underway. Global news 24 hours a day on air and a Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom Francine.
Laura, thanks so much. Laura Wright in London. Now, the world's biggest wind turbine maker, Vestas Wind Systems, has incurred bigger losses than expected or than analysts had predicted. Now, the Danish company has maintained its guidance for the full year as it struggles with the impact of snarled supply chains and rising commodity prices. Well, we're now joined by the Vestas Chief Executive, Henrik Andersen. Mr. Andersen, thank you for joining us. Talk to us about inflation. Do you think it's peaked when it comes to the components, and are you able to put on these price hikes to your customers?
I think it's probably too premature. I think if we take the macroeconomics and what has happened through a first half of this year, I think it's too early to say. And I think unfortunately, most of us as private consumers, we also feel that pain in terms of the consumption related to our utility bills, whether that's electricity or gas or anything like it. So I think that one is probably still up for some uncertainties for the remaining part of the year. I think positively here, what we are saying, it hasn't gone any worse or it hasn't gone any ease, but we are just executing on a year, which will be, as we said after Q1, at a guidance between 0 and -5. But in reality here, we're just working through that backlog, which we have had. And you have also seen the changes quarter on quarter. And this quarter was actually the highest price tag on a wind turbine average for the last 10 years, which is one of the most sold one reason where the EBIT number will change in the coming quarters and half years.
Yeah, and certainly the analysts like that, Jefferies like that, Citi like that in their notes and in their response to these earnings and the stock up in the session currently about 4%, Henrik, largely on the back of that pricing strength. Do you see that as, is that the new normal, or do we return at some point in the next 12 to 24 months to those declining prices for turbines?
I think that depends on several things, but I think actually right now, if I speak, which I do quite a lot right now with customers directly, I think it's fair saying in part of solving an energy crisis that is here and it's present and it is for real in Europe, you have to start arguing how do we increase the capacity that comes from renewable and our part of our solutions as well. And therefore, the output, the only way to bring the electricity price down or the energy price down is to putting more capacity in. So there will be a mix of that pricing, at least if the current market condition prevails also on components and raw materials, then pricing will stay high. We are exceptionally disciplined because the only way to get Vestas out of red numbers is to remain disciplined to pricing.
But Henrik, will stay high, or are you increasing? Can you further increase your average selling price?
I will always sell the turbine at the highest possible price. And if there is an opportunity to get more for a turbine, I think it's a fantastic, valuable asset and it lasts for plus 30 years. But we will there work with individual customers. Every customer has individual projects And of course, this is at least an indication of where we are in this quarter. And I don't foresee that we are changing that in the current statement. So continue higher pricing and continue high pricing in the industry.
Okay, Henrik, we want to get your views on the policy making in Washington. The Inflation Reduction Act, it's essentially a climate bill. To what extent is your sector going to benefit as a result of this spending? And are you likely to up your investments in the US as a result of this?
Now, I love IRA for a couple of reasons. First of all, it takes the uncertainty away from the industry, which has been ongoing for at least 4 to 6 quarters. We have taken shifts out in our US factories for, I think, the wrong reasons. When you have an uncertainty about policy structures in energy solutions that last 30 years, it's stop and go. And that hopefully will be a way within the next 10 days when the president finalized the act, so to say, by signing it. That gives then a permanent structure for the next coming 10 years. It will benefit renewable, it will benefit both the onshore, offshore, solar, and not least also an important part here, the hydrogen in the US. And that will be very, very positive, not only for Vestas, but for the renewable and the energy sector in general. So really positive move in the US.
Talk to us, Mr. Anderson, a little bit about the difference between offshore and onshore. Do you make more money when you sell offshore?
Well, as we are new entrants, we are sort of the new kid on the block on offshore, as we are entering offshore after our purchase of the joint venture we had with MHI. So we will be participating in offshore from 25 and onwards. So we see both on and offshore having similar characteristics. Onshore is has a higher capacity for the customer of it. Therefore, there are benefits to offshore, and therefore there shouldn't be any pricing or any profitability changes between an on and offshore in the long run.
Henrik, onshore, offshore, we need as much energy as we can get, of course, here in Europe amid this gas crisis. Are you seeing greater deployment given those acute needs?
I'm an honest guy. I think it goes too slow. I think right now we have a little bit a bit in, I would say, half denial. We have a current energy crisis in Europe. If we have to solve that, we need to accelerate permitting. We need to accelerate the whole process from permitting, order to commissioning. And that one we can do much more of. I could have taken more orders, and I could also put more capacity to the European utilities. So actually here is the invitation to politicians. If you want to get the meter and the utility bill down for us consumers, there's only one thing: get more capacity in, and we can provide that.
Okay, more capacity, easing on permitting. Henrik Anderson, Vestas CEO, on the back of that confirmation of their forecast for the full year. Thank you very much indeed. The earnings, of course, pleasing investors, currently up almost 6% at that stock. Okay, coming up, certainty is a luxury, but the luxury goods space is being forced to navigate, of course, a very murky path ahead. We will speak with Louise Singlehurst, head of European luxury goods research at Goldman Sachs, and get the views and the outlooks for, of course, the quarters ahead. Stay with us. This is Bloomberg.
Wall Street prepares for the latest read on inflation.
We're all pumped for a happy CPI day.
Will headline inflation ease as expected?
If you get something that comes in much lighter, this rally that we're seeing, we think it will continue.
Instant reaction on Bloomberg surveillance.
That headline CPI figure.
That's going to be a scary number.
That is an upside surprise.
And what it means for the Fed.
The Fed is not about to pivot.
Powell is willing to push this as far as needed.
Inflation in focus today on Bloomberg.
always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We are 45 minutes into your European trading day. You're seeing losses of 0.2%. Again, equity markets, investors, to some extent, treading water ahead of that important CPI print, inflation print out of the US. Expectations are, of course, that you get a number of 8.7%. Let's get back to what's happening in China and, of course, the read across to the luxury space. China's COVID policies, softening wealth and sentiment are among the indicators flashing a possible global deceleration. That is according to Goldman Sachs' luxury macro tracker, which is pointing to an overall slowdown in luxury demand in the second quarter. However, there are some surprises, some bright spots, particularly in the US and Europe. Joining us to discuss those surprises and the headwinds, future potential headwinds, is Louise Singlehurst, head of European luxury goods research at Goldman Sachs. Louise, thank you for joining us. So the upside surprises that we've seen, the optimism within the US and Europe, sustaining and supporting the luxury space, even as there are question marks about China. To what extent does that theme continue, do you think, into the second half of this year?
Hi, good morning. Thank you very much for having me on the show this morning. I mean, just in terms of what we've seen, the big surprise, obviously, with Europe, we saw a phenomenal growth. If you think about what we've just seen in Q2, you've had one of the largest markets, China, being effectively closed for 2 or 3 months, yet these companies were delivering growth around the mid-teens level globally. So it shows the underlying demand elsewhere outside of China. The real surprise and the bright spot in that was Europe. You saw 50, 60, 70% plus growth, depending on which brand. And that's really been absolutely a reflection of the strong underlying local demand, but clearly this kicker that we're now all seeing, and I'm sure we've all got lots of anecdotes where we're watching lots of tourism back in Europe.
Yeah. Louise, are we over luxurized? Are there too many luxury brands that just won't survive the downturn?
I think where we kind of sit, what we can see is definite benefits from scale. And it's really these brands. I mean, the real winners in here, we know it's a category which has phenomenal pricing power. It's well regarded for the ability to take prices higher. But it's the real winners are those brands that can kind of put through a lot more on pricing mix. You think about the extra flavor you get from putting in new SKUs, a slightly higher pricing point with maybe a different colorway, a different material use. But it's the real mix effects. And that's really what the pricing power is all about, and they are going to be the real winners. So we like the ones with pricing power and definitely that market share leadership.
Okay, and that pricing power, of course, will be important in a recessionary environment. Of course, if that is what we're looking at for the second half, where do you expect to see the softness being most pronounced across this sector? You talked about pricing power. That will isolate and insulate some of these companies. Others, though, are going to be vulnerable.
I think what we've seen before, if we look back on the last kind of 15 years in luxury, there have only been 2 periods. We talk about a cyclical sector, but only 2 periods of actual growth corrections. And that's when you have acute consumer uncertainty for the financial crisis. We saw it again in the pandemic in 2020. And what we have seen, what history tells us, is that the corrections can be sharp, but relatively short-lived, between 1 and 3 quarters, and then followed by a very strong recovery. So I think within this, what we're seeing is certain elements. We're looking at certainly all the macro factors. We're following them closely. We talk about our macro tracker. We're definitely seeing a few more bumps in the road, whether we're looking at the traditional wealth factors or whether we're looking at consumer confidence indices. They are beginning to slow, and we are forecasting a deceleration in the second half of this year and going into 2023. But we have this period of kind of slower growth for longer in our kind of base assumptions.
Louise, what will sell in the next 6 months? Is it logos? Is it not logos? Is it, is it the clothes? Is it the bags? I mean, there's not every company, luxury company is created equal, so not everyone will be able to put prices up.
I think when we look at the consumer, these companies, what they have done is evolved hugely. If we take the last 15 years after the financial crisis, they've really broadened out the product offer, much more appealing to a much wider audience of consumers. And that's at the entry level all the way through to the high end. They are kingpins. They are absolutely the marketing geniuses of telling us the things that we really do want in our world, when possibly they are discretionary items and items that we can always postpone. And that's what we have to be mindful of. And this is why we go back to this point, the brands with the iconic kind of heritage, the very strong barriers to entry, and that's really the substance of the sector.
Louise, when we talk about the markets in terms of that demand, of course, you're talking about the strength in Europe and the US, but of course, China, you touched on this. Are we seeing a sense of resilience at all in the Chinese market amid all these lockdowns? We're seeing Hainan Island, that's a big destination for luxury purchases. Are we seeing any resilience there, or do we have to carve out China for the moment until those restrictions are relaxed?
It's very hard to get a good sense of the underlying consumer appetite. What's happening actually locally in the market when so many factors are preventing people from, or asking people not to travel and go to the stores as they would do in a normalized environment. So look, we saw a sharp deceleration in Q2. We had a pullback of around kind of minus mid-30s, what we've seen across most brands in Q2. We've actually got a negative forecast for Q3. I think we're one of the few ones on that. And it's not really about consumer sentiment. It's more about the restrictions and the inability of people to go to the stores as they would do in a normal circumstance. We're obviously monitoring it. We have got a low growth this year and next. We're first to cut China back in November last year. But I think what we are monitoring is that we do think the long-term structural growth is absolutely there for China, but certainly we have to be cognizant of the medium-term headwinds.
Yeah. Louise, thank you so much. As always, Louise Singlehurst there, head of European luxury goods research at Goldman Sachs. Now, coming up, Kenyan authorities have begun counting ballots in the country's presidential election. We're live in Nairobi next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your just soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Welcome back to The Open, everyone. 53 minutes into the European trading day. It's all about CPI in the U.S. and markets. You can see just waiting for that number to give us clues about what the Fed does next. Now, Kenyan authorities have begun counting ballots in one of the closest presidential elections since the country reintroduced multi-party democracy 3 decades ago. Our very own Jennifer Zabazajja joins us now from Nairobi. Jen, thank you for joining us. So counting is underway. What's the state of play?
Yeah, counting's underway, Francine, and it's still very early on, but what we saw just a few hours into the day is that Deputy President William Ruto, at this point in time, and it's still early, I'm glad you said that, is taking a slight lead over former Prime Minister Raila Odinga. What we do know is only about 10% of the votes are counted at this point in time, but we're supposed to get the first official electoral results from the IEBC, which is the electoral agency here. But there's a lot to pay attention to, and as we expected, it's looking like a very close race. Ruto is only slightly ahead of Odinga, but the agency did tell us voter turnout was down significantly this year, which is really, really important to point out for a young country like Kenya, but still a lot to watch for in terms of reaction on the streets and also reaction from these campaigns, because we know that that has a lot of effect on overall sentiment.
Okay, so still a long way from really calling this, and that low turnout, as you say, will be maybe a concern for these candidates. What will the priorities be then for whoever does eventually win this when it comes to addressing the economic concerns of people across Kenya?
Yeah, Tom, I mean, you guys have been talking all morning about U.S. CPI, and I think the inflation story is very similar here. But the way that it's different is that a lot of Kenyans have been paying significantly more for their key staple items. I'm talking cooking oil, fuel, corn, and these higher prices are not something that most of the population can afford. And so whoever does become the next president is really going to have to figure out how to manage what is a growing hunger problem, while also at the same time, Tom, really focusing on this debt issue that we've been talking about for a few days now. Kenya's public debt at this point stands at about $72 billion. And whatever we do see from U.S. CPI in a few hours will, of course, affect what happens here in Kenya, like other emerging markets, because then that affects what the Fed is going to do with interest rates. And with a country like Kenya that is already so in debt to countries like China and elsewhere, we're going to have to see how this next leader is really able to manage the economic strength that Kenya has been seen as for a while, and also boost jobs and really get the spending under control.
Okay, Bloomberg's Jennifer Zabazajja, of course, on the ground in Nairobi for us on the latest in terms of that election and the count. Ruto leading for the moment, but only about 10% of those votes counted so far. The markets currently here in Europe, you're looking range-bound. As Francine was saying, it is all about that CPI number. The estimates of 8.7% gains in Germany. The DAX up 0.2%. Stay with us. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Big Tech reports earnings.
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this.
The fact that they are not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority.
Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
I think it was a rough quarter for most companies. In the crypto space, we obviously had some big episodic events that happened during the quarter, and so some of those asset prices shrunk, which then impacts things like the assets on platform and other numbers.
The pipelines going west from Russia are the critical link to energy security in Europe. Russia is willing to flex its energy muscles against Europe, and this could be a sign of that.
Due to the macroeconomic uncertainties, as well as due to high levels of inventories that customers have built across various end market segments for us, those inventories are being adjusted down, and that is what is resulting in reduced demand for us.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Inflation fears, stocks and bonds drop before key U.S. CPI data today. Chinese price growth hits a 2-year high. The big sell, well, the world's richest man, Elon Musk, offloads nearly $7 billion of Tesla stock in case he's forced to buy Twitter. Plus, collapsing demand. Well, Micron is the latest chip maker, warning that business is rapidly crumbling. Now, first thing is first, let's check in on the markets, and this is what we're seeing across the board. If we look at some of these European stocks, pretty much unchanged. The focus, of course, firmly on that U.S. CPI data out at 1:30 p.m. UK time. That should give us a good indication on what the Fed does. Certainly, the market pricing in for extra hikes, but then we have worries about energy costs, maybe even going up than we're expecting, and then certain pockets of deflation. I would suggest the 2-10 spread is really the one that we need to watch out for. That 2-year Treasury rate actually exceeding the 10-year by almost 50 basis points. The inversion is the deepest since 2000. Some say this definitely points to a recession. Others saying, look, this time is different because of all of the liquidity that the Fed and other central banks have been put out there. The picture for the UK down at 0.1%. You can see a similar case for the CAC 40. A lot of focus today is also on energy prices. We're now talking about possible blackouts in the UK engineered by the government into the winter months, a kind of sort of a plan B that Germany's also looking at to deal with a shortage. Now, a big day for eco data. Traders counting down to the latest U.S. inflation figures.
Look at inflation expectations.
The inflation expectations.
Consumer inflation expectations are dropping.
Inflation expectations and break-even inflation rates starting to come down from their highs.
Probably 100 basis points is not necessary.
We are at an important inflection point in the inflation story.
If we've reached peak inflation, what does that really tell us?
We're going to see inflation decline, but to what level?
Does it mean it's really going to fall down to that 2% target that the Fed is looking for?
because the forecast in the Fed to say that they're at neutral.
The labor market right now is very strong. Inflation is very high.
It makes the notion that we're at neutral comical.
That's a 2% inflation rate.
I find that hard to achieve.
We're still experiencing this inflation surge.
Well, for more, we're joined by Bloomberg's Simon White. Simon, you're a macro strategist. For people that are less familiar with you on TV, you're also a mathematician. So, you know, I know you're looking at U.S. inflation, but what's the killer chart that you're looking at?
Well, I think what I'm looking at for this month's release is the contribution that transport is giving to the main number. So a lot of airtime is given to the shelter component because it's got the biggest weight. But actually, in terms of what's contributing the most, transport has been contributing almost half of the year-on-year headline CPI numbers. I want to be watching that to see if you're seeing any considerable fall. So we'll see today how the numbers influence that.
China's July CPI numbers rose from 2.7%. How significant is this reading?
I think that's very interesting. I mean, it's kind of gone under the radar for now. It may turn out to be nothing, but I think you would be kind of, you need to keep an eye on it as basically a potential macro risk because if China gets into a situation of high inflation, they have the potential for a weight price spiral. And then the knock-on effects are potential major yuan devaluation. Now, it's a low risk right now. I don't think people are really thinking it's a risk you need to be paying attention to today, but we've seen a lot of unexpected things happen this year. So if it were to happen, it would have pretty big implications for the macro outlook.
Simon, thanks so much. Simon White there, our resident macro strategist, but also mathematician. So I'm a little bit obsessed actually with your math degree, so we'll get back to that and see what it can tell us about maybe the 210 inversion. Now, we're joined also by Alex Brazier. He's deputy head of the BlackRock Investment Institute. In a previous life, you were basically a central banker, so it must be extremely interesting on the other side to say, like, wow, are you glad that you're not into the central banking world anymore? Because it seems like they can't get it right.
Well, yes, I am glad, is the short answer. I think it's a difficult time for them for a number of reasons. The first reason is obviously the sharp rises in energy prices, which drive up headline inflation, and we'll see more of that. We've seen it in Chinese inflation this morning. We'll see it coming down in US inflation this afternoon, but still very high. The more fundamental issue, though, and this is what makes it so difficult for them, is that economies just don't seem to be able to operate at the same level of activity as pre-pandemic without shortages and generating inflation. And that puts them in this terrible position between a rock and a hard place of slam the brakes, cause the deep recession, or live with these shortages and live with more persistent inflation.
At some point, do the shortage actually stabilize? I know we're looking at that inflation print, and I haven't been this excited. I mean, not since last month, but certainly this is a very exciting U.S. CPI print. But can inflation go away as quickly as it came?
Absolutely not. So,
zero chance.
Headline inflation can come down, and it can come down reasonably quickly. We've already seen falls in gasoline prices, falls in commodity prices. So going from 9 to 6 could happen reasonably quickly. It's the other bit. It's the other bit that counts. It's the 6 down to 2 or 3 even that's going to be really difficult, and that reflects kind of core pressures, broad-based pressures. It reflects the fact that the US economy, like other developed markets, is operating at a higher level of activity that can actually sustain comfortably.
So what do you expect in terms of the US CPI print today? And does it change? I mean, depending on the number they get, does it actually change what you think the Fed does?
No. I think it could,
at any level.
I'm giving some very short answers to these
I like
things.
that.
I think, first of all, it could come down. Headline inflation should come down. That largely reflects gasoline prices. That doesn't change the underlying picture. Doesn't change this fundamental issue that the Fed is facing, which is broad core inflation pressures, telling them that the economy is operating well above what it can sustainably operate at, and that means it's going to continue raising rates a bit more. The market was probably premature in seeing this so-called Fed pivot.
Is there a danger that the market preempts what the Fed does, so it prices it, and then the Fed just has to do more?
Yeah, I think the market's very sensitive to these inflation prints, partly because it overreacted in the other way to sort of suggested pivoting by the Fed. What we see is the Fed raising rates a bit more to close to 4%, 3.75, 4%, but it changes course in our view, not because of the inflation numbers, but because it sees the US economy actually contracting early next year.
The 210 spread, this is the thing. I mean, I talk about it as much as I used to talk about LIBOR, like early 2000. Like what is the 210 right now?
Yeah, I think that it's telling us two things, actually. Firstly, it's telling us, obviously, the short end's come up. reflecting the fact that the bond market now is expecting the Fed to tighten a bit more. Equity market, interestingly, hasn't really responded to that.
Yeah.
But it's also more interesting what's happening at the long end. So the term premium has been absolutely crushed again. It's back at kind of pandemic low levels. That makes us cautious about US Treasuries at the long end, and it's one reason why we expect over time Treasuries not to deliver particularly good returns.
And equities, therefore, at some point need to correct?
Well, I think equities are taking too much hopium at the minute. They've kind of seemed immune to the fact that the Fed is going to continue raising rates in the short term, and certainly immune to the fact that, consistent with that, the US economy has stalled and is going to enter some form of contraction. The restart has stalled. It's going to contract. That's not reflected in earnings numbers. We weren't buying the dip. We're even more cautious now.
All right, Alex, thanks so much. Alex Brazier, their deputy head of the BlackRock Investment Institute, stays with us. We'll talk a lot more about maybe some of the industries that we should watch out for, maybe a bit more inflation resistance, and we'll also talk about the Bank of England. Coming up, U.S. Inflation Day, in case you hadn't noticed. It's a risk-off mood in the markets ahead of the data out later today. We'll also discuss the prospects of a recession as the Treasury curve inversion deepens. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
When U.S. jobs numbers are released,
this is quite a surprise. Just wow.
Bloomberg brings you crucial data at terminal speed.
The headline number, 528K. That takes us back to where we were when the pandemic started.
And instant expert analysis.
That recession talk just got a freezing cold shower.
The Powell pivot isn't going to happen, not with numbers like these.
This is the payroll pushback.
When does this become painful?
Quite frankly, the market has 2023 wrong.
Nobody covers jobs day like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Micron, the leading U.S. maker of memory semiconductors, has become the latest chip maker to declare that demand is actually falling off rapidly. Speaking to Bloomberg, the chief executive warned investors that revenue won't meet projections, sending chip stocks tumbling.
Due to the macroeconomic uncertainties, as well as due to high levels of inventories that customers have built across various end market segments for us, those inventories are being adjusted down, and that is what is resulting in reduced demand for us.
Let's bring in Bloomberg's chief Asia economics correspondent, Enda Curran, for a macro outlook. Enda, first of all, what does this warning actually suggest for global demand?
Well, they're not the only semiconductor making this warning, Francine, and it does suggest now that global demand for products such as home computers, smartphones, and all the other appliances that consumers were buying around the world during the pandemic, during the whole shift to home kind of phase, is now coming off the boil. Now, experts have been predicting that that kind of demand for those merchandise goods would come off the boil, but it seems to be happening. It has two implications. It's important for East Asia, by the way, because this is a part of the world that really benefited from demand for those tech goods, both in terms of the chip makers in Taiwan and around the region, and of course those producers of smartphones and everything else in South Korea and China. The other angle on it, I would say, is that it could impact capital investment. A lot of companies, again, in this part of the world had pledged billions in terms of investment in their semiconductor facilities. Governments around the world had been encouraging that too. So if we are seeing now a turn in the semiconductor cycle, it could suggest a cooling both of exports out of Asia and, of course, the capex cycle for those companies involved.
And how much of this is an industry problem or an industry concern? How much of it is it the world going for a pretty big slowdown?
Well, there's no doubt there could be some industry issues, specific issues involved. Part of it could be, for example, reflecting a build-up in inventories, Francine. A lot of factories that I spoke to last year were saying they were doubling the pace of semiconductors that they could buy because they wanted to buy them when they could get them. And perhaps now what they're doing is basically running down those inventories, which would be more of an inventory story rather than a demand story. But nonetheless, though, you have to look at what's happening globally. Mortgage rates are going up, central banks raising interest rates, inflation hurting consumer sentiment. It does speak to fading demand for merchandise goods, and it looks like we're starting to see that through the technology cycle now.
And thank you so much, our Chief Asia Economics Correspondent there, Enda Curran. Now we're back on the markets with Alex Brazier. He's Deputy Head of the BlackRock Investment Institute. And Alex, thank you for sticking around. You were basically saying that, we'll probably do a correction in equity markets. If you look at some of the industries, I don't know how you read China. So we had CPI prints today, maybe more elevated than expected. Like, what do you do with China right now?
Yeah, we are neutral on China, but we see some pretty big forces weighing on growth. And we were just hearing about some of them there. China was a massive beneficiary during the pandemic from this shift towards goods production, goods consumption and away from services, with export growth, annualized 15%. As that reverses, as that trend reverses, as the West starts going out again and buying fewer electronic goods and other goods, that export growth is going to come right off and be a real drag on Chinese GDP. That matters because the authorities, if they want to hit their growth targets, will need to stoke up domestic demand. And that's where the inflation number comes in as a possible constraint on that.
Will they put policy in place to do that? It was unclear. I think in the last 10 days we had doubts about whether the Chinese policymakers would actually do enough.
Yeah, I think that's right. And our view is they will do something, but they will, on balance, be a bit grudging about it. And so this reduction in export demand, from which they've hugely benefited, as it goes away, they will see some of that transfer to GDP growth because domestic demand won't take up all of the slack.
Alex, what do you do with UK assets? So we have the Bank of England with this really dire warning. I mean, half the people are basically saying, look, you're too pessimistic. This is not, you are behind the curve and you should have done more. And then they're really got praising, for example, from Mohamed El-Erian saying, well, this is the only honest central bank.
Yeah, I do think they're showing that honesty is the best monetary policy. And the key thing they're being honest about is that to get inflation down to 2, they actually need a recession in the economy, because even looking through energy prices, food prices, it's a bit like we were saying about the Fed. Inflation is running hot. The economy is running at a level above what it can comfortably sustain. And so the bank faces this really invidious trade-off between a recession or more persistent inflation. Inflation can come down, headline inflation, sure, as energy prices come down, if that happens. But the key issue facing the bank is actually this fundamental stubbornness of broad-based core inflation.
Can the government and the new prime minister, whoever that may be, put policies in place to avoid a recession?
Well, I think that's difficult because the bank would then need to respond in order to get inflation down. So there's, again, another trade-off here. But what the UK is showing, more clearly than the Fed has shown and the ECB has shown, actually, is this stark trade-off that all central banks in developed markets are actually facing, which is if you want 2% inflation in 2 years' time, you have to have very, very weak growth, possibly a deep contraction over the next 18 months.
But Alex, so what does that tell us? That the mandate is wrong, or that actually we're finally realizing that the reach and the power of central banks is very limited?
Well, I think the power of central banks to actually keep inflation on target month after month is obviously very limited.
Right.
The interesting question is how quickly you bring it back after it departs. And what we really need now is a kind of debate about, well, what's the appropriate speed to bring that core inflation down, given this trade-off? And is 2 years the right speed? It's the normal speed, but that involves a deep recession. So we may find ourselves living with a bit more inflation in the US and the euro area and the UK as central banks basically bring it back in slightly more slowly.
Alex, thanks so much. Alex Bracher there, Deputy Head of the BlackRock Investment Institute, joining us this morning. Now, coming up, the richest man is short of cash. Elon Musk offloads almost $7 billion of Tesla stock in case he's forced to buy Twitter. We'll bring you that story next. And this is Bloomberg.
Wall Street prepares for the latest read on inflation.
We're all pumped for a happy CPI day.
Will headline inflation ease as expected?
If you get something that comes in much lighter, this rally that we're seeing, we think it will continue.
Instant reaction on Bloomberg surveillance.
That headline CPI figure.
That's going to be a scary number.
That is an upside surprise.
And what it means for the Fed.
The Fed is not about to pivot.
Powell is willing to push this as far as needed.
Inflation in focus today on Bloomberg.
Now they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, Elon Musk says he needs the cash. The world's richest man has sold nearly $7 billion of Tesla stock in case he's forced to buy Twitter. The sale, Musk's biggest on record, comes just 4 months after he said he had no further plans to sell more. Well, Bloomberg Quick Takes Alex Webb has the story. Alex, you're a great Elon Musk watcher, and you understand maybe his thinking more than most. So why now?
The shares have recovered quite a lot since their lows. They were, at risk of dipping below $600 at one stage. They're now back up in the 800s. So if this risk is coming up, even if he doesn't have to buy Twitter, there remains a possibility that he'll have to reach some sort of settlement. And that number's been put anywhere as high as $10 billion. So he needs to cover those costs. The odds are the sort of band of investors he had brought along with him are not going to want to stomach those costs. Right. So he might want to cover them himself.
So was that the most interesting part, that actually he thinks investors will pull out? Do we know who?
Well, the names like Larry Ellison, the big ones in there, a lot of other sort of prominent Silicon Valley figures, people who have long backed him. I think the biggest takeaway for me is twofold. It's like what it says about where he thinks Tesla stock is going to go, and what he thinks about the Twitter deal and how that's going to play out for him. He had been going into it saying, oh, there's absolutely no chance I'm going to win this. Well, there clearly is a chance that absolutely no chance I'm going to lose this. Yeah. There clearly is a chance he's going to lose this. He could also say that right now he's kind of taking some profits. He's going, well, I'm not super confident that the Tesla stock is going to be here come year end. Clearly stuff like CPI print will have an impact on
Alex,
that.
If you're a Tesla investor, this is a nightmare.
It is a real head scratcher, and it also, speaks to one of these risks of investing in fundamentally Elon, right? He is sometimes going to go off and do wildly unpredictable things. You take the rough with the smooth. This is absolutely the rough. It's a distraction, but it also has an implication directly in your investment because they're selling a big chunk.
Alex, there's a Twitter case. Is it like in front of a jury? Is this like Amber Heard versus Johnny Depp kind of case?
So it's not a jury. It's held by it's overseen by a judge, right, in Delaware. I think the court case is going to happen in, I think, October. Yeah. Elon's lawyers had tried to push that back to the new year. I think they suffered a bit, considered like the weigh-in for a boxing match. He certainly came out the worst in the weigh-in than did Twitter itself. It looks, the case history seems to suggest it's going to be very hard for him to win this. There are very few instances where the person trying to pull out of a deal has succeeded in doing so, largely because the difficulty is showing why you need to pull out. And he's basically saying that they lied to me about this,
the bots
this
and things
data,
like that.
right? And actually, that was never in the original agreement. That ultimately, he said, I buy this, I'm not going to do any due diligence. If they haven't provided the data, then I pull out. That isn't a justifiable reason to do so by a lot of counts.
Okay, so do you wake up and just read his tweets first thing you do? Because that's what I do. And then I sometimes love him and hate him. It's a very complicated
In all honesty, I don't actually follow Elon on Twitter because I know that anything meaningful, a lot of it is guff. Anything meaningful is going to be retweeted into my stream. I don't need the kind of constant pressure of it feeding into me.
You're a company man. You're expecting, Bloomberg News to write it before you see it from the man himself.
I get those alerts more recently. Can I point out one other story, though, that I think is really significant, not as many people talking about? Twitter is a sort of $25 billion company. There is a huge court case impending to do with Google. And that is something that is a massive deal because it is tackling Google's advertising business. And Google's an advertising company, not a search company.
Yeah, so we have to look, of course, actually we'll get you back on and delve into that a little bit deeper. Thanks so much, Alex Webb there from Bloomberg Quick Take. Coming up, Trivago touts strong second quarter results, but prepares for a travel slowdown ahead. We'll be speaking to the chief executive, Axel Hafer. He's up next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
As you look at the company you've created, how do you think you're having an impact on the world for the betterment of the world?
We are by far and away the best positioned entity to solve the question as to what does the human genome mean and how can you apply it to individuals.
Inflation fears, stocks and bonds drop before key U.S. CPI data today. Chinese price growth hits a two-year high. The big sell, the world's richest man, Elon Musk, offloads nearly $7 billion of Tesla stock in case he's forced to buy Twitter. Plus, collapsing demand. Micron is the latest chip maker, warning that business is rapidly crumbling. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, time for some earnings news, and Trivago has touted strong second quarter earnings results. The German meta-search company says while it continues to experience high pent-up demand, it also expects a slowdown in travel in the second half of the year and beyond. Well, we're now joined by Axel Hafer. He's the Chief Executive Officer of the travel platform Trivago. Axel, as always, thank you so much for joining us. I have never seen such a traveling boom. People want to go on holiday. I speak to, of course, my friends around me, but also a lot of the cab drivers. 3 holidays in the summer. What happens in the later part of the year?
Yeah, we expect that the demand will come down, to be honest, because prices are very high and there is a lot of pent-up demand that we have benefited from and all the other travel companies have benefited from. But on the other hand, there are big labor shortages, and I guess a lot of us have experienced that there is an imbalance of supply and demand, and we think that will come down.
Axel, is this because people worry, are they spending too much money now and then worry as winter comes and they have to pay for bills? Is it inflation? Like, how do you see that correlation between people cutting down on travel as one of the first things as we get into the winter months?
Yeah, I mean, it's a combination of things. I think one thing is that people actually have saved quite a bit of money during the pandemic because they couldn't travel, they couldn't go out, they couldn't spend. So there was quite a bit of money that was now spent on doing trips. The other one is that obviously inflation is hitting us everywhere, and so depending on where you are based, I mean, for example, in Europe, energy prices are sky high, and in winter people will feel that a lot more. So the disposable income is coming down. And the combination of that will just lead to lower travel activity.
Axel, tell me a little bit about how people's spending habits when they travel changes. Do they go for luxury hotels but want to pay for cheaper flights? Or will they also spend on expensive flights because they just want to get to where they want to get to?
So what we are expecting is that people will save on transportation because that's where it is easier to save money. And we see that, for example, in the UK right now, the share of domestic travel is higher than pre-pandemic already. and we expect the domestic share to go up pretty much everywhere. And that's how you can, with the same budget, still get the time that you need to get a break by just going for cheaper destinations, basically.
Axel, what can you tell us about the most popular destinations? Again, we have this pent-up demand because of COVID. Has it changed the way we travel forever, or is it just in a short period of time?
Yeah, I mean, the top destinations are basically back to where they were. I mean, Dubai, obviously very popular in the UK, but also the big cities where you want to travel to, London, Berlin, in the US, New York, Vegas. Those are the top destinations, and I don't think that will really change. And we've seen different destinations during the pandemic where it wasn't clear that you could get to certain destinations, but I think the most attractive cities are still the most attractive cities. So I don't think that will change in the next couple of years.
Okay. What's the most attractive city? Has it changed in the last 2 years?
No, I mean, depending on which country you're looking at, in the US it's Vegas and New York. In the UK it's Dubai, London. It's a bit different country by country, but the big cities, the most popular cities, the tourist destinations are still on top of everybody's list.
Long lines at airports, thousands of canceled flights. How long are you expecting this to last, Axel?
Yeah, I think it is actually a big problem, and you see labor shortages in a lot of sectors in most of the big markets, but the hospitality and travel industry is hit hardest, and the reason is obviously that it wasn't a very stable job through the pandemic, and a lot of companies have also reduced their staffing levels, and it will take quite a while to go up in staffing levels, and to be honest, it's also a matter of increasing salaries to basically get everything back to balance. So I think it's likely that prices for traveling will have to go up to get to an equilibrium really of supply and demand again.
Axel Hiffer, thank you so much for joining us, the chief executive there of Trivago. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gehrens. Hi, Leanne.
Hi, Francine. Republicans are rallying around former President Donald Trump in wake of federal agents searching his home in Florida. From members of Congress to potential rivals like Florida Governor Ron DeSantis, they echoed the former president's statement that the search was politically motivated. FBI agents searched the Mar-a-Lago residence as part of an investigation into missing classified records. Here in the UK, households are already almost £1.3 billion in debt to their energy supplier before it's even winter, and that is when bills are set to surge yet again. British consumers typically build up credit with their providers during the summer when energy usage eases. That limits the shock of higher demand in the winter, but soaring gas and power prices have made this summer expensive. China's consumer prices rose 2.7% in July. That was below estimates, but still amounted to the fastest inflation rate in 2 years and was higher than the June figure. A surge in pork prices was a key driver. Meanwhile, the rise in producer prices slowed to 4.2% last month from 6.1% in June. Several of Europe's major rivers are running dry, disrupting $80 billion in trade routes. Blame it on a very dry summer that has set heat records across the continent. The Rhine has dried up to the point of becoming all but impassable at a key bottleneck that is slowing down vast flows of both diesel and coal. In South Korea, the capital Seoul is bracing for more rain after being hit by one of the worst storms in more than a century. Widespread flooding has killed at least 9 people. More than 20 inches of rain has fallen. Opposition lawmakers are criticizing the president for his response to the disaster. And 3 professional golfers who joined the Saudi Arabia Finance Live Golf Series will have to sit out of the FedEx Cup's playoff after a judge refused to lift their suspension by the PGA Tour. Taylor Gooch, Hudson Swafford and Matt Jones qualified for the playoffs and its $18 million top prize, but were banned from participating because they also joined the rival Live circuit. The golfers say the PGA ban is anti-competitive. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, Prudential's first half earnings rose less than expected as the pandemic disrupted sales in key markets like Hong Kong. We'll speak to the insurer's chief executive officer. He's Mark Fitzpatrick. That's coming up next, and this is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window. They have thorns on them.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. We're just getting some breaking news out of China. China ending its Taiwan military drills. This, of course, was started last week. It lasted for 5 days, and it was on the back of that Nancy Pelosi trip to Taiwan. They're saying that they're going back to some of the regular patrols that we've seen from China in the last couple of years. Now, let's get straight to some earnings news. Prudential's first half earnings rose less than expected as the pandemic disrupted sales in key markets such as Hong Kong, underscoring the challenge posed by the insurer's pivot to Asia. We are delighted now to be joined by Prudential's Chief Executive Officer. He's Mark Fitzpatrick. Mark, thank you so much for joining us. First of all, given some of the border closures that actually affected Chinese customers, what does it mean for Prudential's strategy? Does it change where you want to be focused on?
So, Francine, hi, good morning to you. It's great to be here. I think in terms of the border closed between mainland China and Hong Kong, what it does, it means that we're pivoting now on our domestic business. So the domestic business in Hong Kong with 7 million consumers, great opportunity for us to meet their health and savings needs. And we've seen a real uptick in terms of consumers in Hong Kong trying to get more health and protection products. We saw a real uptick in COVID cases in the first quarter of this year. There was a hard lockdown for the 5th wave in Hong Kong. And effectively what we've seen coming out of that is a relaxation of some of the COVID restrictions down to 3-day quarantine in Hong Kong, which is great, and a real opportunity now for the business to bounce back.
So what are you expecting, Mark? More Chinese buyers purchasing insurance in Hong Kong? Are they looking for more local providers? What do the next 18 months look like?
So I think what we've, every quarter, Francine, we do an exercise and a survey, independent survey, that actually asks people in Chinese mainland what is their intent of coming down to Hong Kong when the border opens. And what we've seen is a dramatic increase in appetite for mainland Chinese consumers to come down to Hong Kong and to buy insurance policies in Hong Kong. And effectively what they get when they come to Hong Kong, they get different currency options, they get an option to participate in critical illness cover, and they also get an option to be able to participate in the phenomenal healthcare system that we find here in Hong Kong.
Mark, give me a little bit of a sense of, now that, you know, the Pru is largely, of course, focused, if not all focused in Asia, will you delist from London?
So I think what we have is we have two primary listings. We have a primary listing in London and we have a primary listing here in Hong Kong. And we raised $2.4 billion in an equity raise last year here in Hong Kong as a way to try and increase people's awareness and increase our profile here and get more investors that are familiar with the Asian market. What we're looking at going forward, I think, is to really make sure that we drive through our pivot to Asia. It's going to be our home going forward. We are agnostic as to the question of domicile, and as regards the element of listing, about 40% of our shareholders are based in and around the UK, and most of the liquidity today is traded through the London line. We are, though, that being said, we are applying and we are trying to get onto the Hong Kong Shanghai Index. If that comes through, and we'll hear later on this month if that comes through, that should create extra demand, but also give access to the Shenzhen and Hong Kong Connect.
How can you expand in China? Do you want to expand in China?
So the mainland Chinese market is huge, and generally speaking, what we've seen is, and the regulators ask for, is greater penetration of insurance products. I think on average it's about 2.5–3% at the moment. The regulator's trying to aim for about 5%. So mainland China is a huge market for us. It's one that we'd like to get into even more. We're in 99 cities, access to 6,000 outlets there, and it's a great opportunity for us to grow into that footprint and really do a lot more in mainland China.
Mark, any interest to take a majority stake, for example, in some of the joint ventures with CITIC?
So the CITIC joint venture is a great joint venture. We hold 50-50 with CITIC. We would love to own more. But that being said, while we're a willing buyer, you need to have a willing seller. In the absence of that, all our attention is focused on driving that business forward. And we printed some great numbers today in terms of its profits and in terms of its sales and its overall kind of scale that we're reaching. So we've outperformed the market in mainland China by 4 times in this last 6 months. And since 2017, we've continued to outperform the local market. So we're clearly doing something right. We're clearly connecting with consumers, and we've clearly got the right product set that they need.
Mark, give me a sense of how inflation overall will hurt your earnings. Do you worry that, you know, inflation, we're talking about peak inflation, but inflation's here, it's here to stay, and so at some point, customers will have to face whether they continue with insurance or they actually pay for gasoline?
So I suppose an element to bear in mind is that, so we saw mainland China produce and print its CPI number earlier on today, 2.7%, a far cry from what we're seeing in the UK, Europe, or in the US. Undoubtedly, inflation is going to have an impact in terms of where consumers spend, and therefore, Francine, to adjust to that, we're creating new products, we're creating an ability to be able to reprice, we're creating more bite-sized products so that consumers get some protection, but without necessarily needing to commit for a multi-year policy or a very large policy that might tie their hands up financially. So we're trying to adjust our product set for the economic environment that we expect to see over the course of the next couple of years.
And Mark, when you look at China's common prosperity drive, which really has resulted in the bankers' pay and how much you can pay them, do you struggle or worry about banker retention, insurance, you know, individual retention?
So our retention levels in our business in mainland China is fine. There's no issue with that component at all. We're actually seeing, because we have the backing of a state-owned enterprise and because of our brand in mainland China, actually we're a source of, we're a magnet for really interesting talent that wants to come into the insurance world. So people come in because they see there's an opportunity to work with the Western organization, but yet one that's got fantastic backing with CITIC, and actually that's winning. And people want to be with the winning organization, so they're coming to us.
All right, Mark, thank you so much for the interview. Mark Fitzpatrick, there, the Chief Executive of Prudential. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Elon Musk has sold $6.9 billion worth of shares in Tesla, the first time he's sold the stock since dropping his bid to buy Twitter. The shares were sold on Friday of last week. Musk has now offloaded around $32 billion of Tesla stock in the past 10 months, but now says he is done selling and will buy Tesla shares again if the Twitter deal doesn't close. Coinbase has posted a $1.1 billion loss and lower than expected revenue as the largest U.S. cryptocurrency exchange was battered by tumbling digital asset prices. Coinbase has slumped 65% this year in what has been labeled a crypto winter. Revenue declined to over $800 million, missing average estimates, while Bitcoin's share of the trade increased to almost a third.
I think it was a rough quarter for most companies. In the crypto space, we obviously had some big episodic events that happened during the quarter. And so some of those asset prices shrunk, which then impacts things like the assets on platform and other numbers.
And Bloomberg has learned that the U.S. Justice Department is preparing to sue Google as soon as next month for alleged illegal dominating of the ad market. It would be the DOJ's second case against Google after its 2020 antitrust lawsuit. In a statement, Google said its ad technologies helped websites, apps, and small businesses reach customers around the world, and that competition has expanded options for both publishers and also advertisers. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, Kenyan authorities are counting ballots in the country's presidential election. We're live from Nairobi next. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Kenyan authorities are counting ballots in one of the closest presidential elections since the country reintroduced multi-party democracy 3 decades ago. Our very own Jennifer Zabazaja joins us now from Nairobi. Jen, so counting is underway. What's the state of play currently?
Yeah, Fran, good morning. Counting is underway. We've been anxiously awaiting these results, as the rest of the country has as well. The last update that we had is that just about 15% of the votes were in, about 2 million votes counted. And right now, it's looking like a slight lead for Deputy President William Ruto over Raila Odinga. But I have to stress, and I know you were saying it before, it is still very early. There's still a long way to go. And the one thing that we did hear from the electoral agency is that voter turnout was significantly down this year, about 60%, less than 60%, which is really significant because this is a very young country. They wanted to get out the vote. Both of these candidates really pushed forward on this. But the whole country, the whole world, and really the markets are awaiting this decision to see who is going to be the next president of Kenya.
Yeah, any market reaction so far?
Well, the reaction, I mean, if you just look on the streets of Kenya right now, it's about noon here. And I have to say, it's relatively quiet. I mean, what a lot of people were anticipating going into this was a lot of anxiety. We saw that reflected in the markets. We saw the Kenyan shilling depreciate. We saw foreign outflows accelerating because the market was really concerned about the potential for unease and instability like what we've seen in previous elections here in Kenya. But if you just look out, and I'm sitting outside right now, it's pretty quiet. People are back to business as usual. So this could potentially signal what people were hoping for, which is a peaceful election, which then encourages peace and stability within the Kenyan markets, which could be reflected now by the market. We're seeing the shilling up the most that it's been in 4 months. We're seeing stocks have some gains as well. And so investors are going to be paying attention very closely to who this next president is, because they're going to be dealing with an economic crisis in terms of debt, in terms of how to get out, encourage more jobs. And so there's still a lot to pay attention to and that the market is watching.
Yeah, and inflation is so rampant, Jen. For the next president, what will have to be his top economic priority on day one?
Yeah, Fran, I mean, I know all throughout the morning with Bloomberg television, we're paying attention to U.S. CPI. That's significant here, too, for the next president, because whatever the U.S. CPI inflation number, that's going to affect what the Fed does, which will in turn put even more pressure on emerging markets like Kenya. Kenya's debt over the past 10 years that we've seen with outgoing President Uhuru Kenyatta, $72 billion right now, $6 million of that owed to China. So if we do see global interest rates rise, which we've been seeing from central banks across the world, that's going to put a lot of pressure on the next president. And so he's going to have to figure out 8.3% inflation here and how to help Kenyans who are already suffering from starvation and drought, how he can help them get more, support the economy better. Fran?
Jen, thank you so much. Jennifer Zabazaja there in Nairobi for us. Now, we're just getting SoftBank seeing some 4.6 trillion yen gain on Alibaba transactions and valuations. So I know that will be one of our main stocks to watch. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kaylee Lyons, and Dan Berger. This is Bloomberg. what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Big Tech reports earnings.
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this.
The fact that they're not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We are at an important inflection point in the inflation story.
Inflation in the U.S. looks very different from other areas like the Eurozone.
You know, the economy is not out of the woods.
The economic environment will eventually shift.
We are absolutely seeing a very disrupted economy begin to heal.
This is Bloomberg Surveillance, Early Edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. The fight against inflation. The latest U.S. Consumer Price Index is out at 8:30 New York time. Elon Musk hedges his bets. The world's richest person sells a record amount of Tesla in case he's forced to go ahead with his deal to buy Twitter. And the great rivers of Europe run dry from the Rhine to the Danube. Crucial trade routes are on the verge of becoming impassable. Welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London, in for Anna Edwards. Matt Miller and Kaylee Lines are in New York. And Kaylee, it's all about risk aversion, curve inversion, and this pre-CPI trading session.
Yeah, happy CPI Wednesday, Danny. That really is what it's all going to be about today, 8:30 a.m. Eastern time when we get that inflation data here in the U.S. It's going to be less about the headline today, much more about the core. Now, of course, the Asian session closed before we got that data, but we did get inflation data out of China overnight, 2.7% on CPI there. That is the fastest acceleration going back 2 years, in large part due to pork prices. So that had a hand in taking equities lower in the region, with the CSI 300 down about 1.1%. The real underperformance, though, came from technology. The Hang Seng Tech Index down nearly 3 full percentage points. Every stock in that index down on the day, and particular underperformance was coming from semiconductors. After the warnings we got from U.S. semi companies like NVIDIA and Micron in the last couple of days, that's weighing heavily on Asian semis as well, including Taiwan Semiconductor down about 2% overnight. Finally, we're going to have to pay close attention to the bond market all around the world today, considering that inflation data could have the power to move it in a material way. Ahead of that, though, you did see yields really up across the Asia Pacific, including in Australia, where that 2-year yield rose about 7 basis points, Matt.
Yeah, I think the chip story is absolutely fascinating. What a time for U.S. chip makers to be getting $52 billion in subsidies from the government. Nonetheless, that'll have little effect on what you see in futures and today's trade. Nothing's really going to move the needle until the CPI number comes out. You'll see maybe some fluctuations. We are up 0.3% on the S&P, but pay attention to, well, the cash close was 41.22. So that's the number you need to keep in mind when we get to the open at 9:30. The U.S. 10-year yield coming down just a little bit as investors buy bonds, but not really much movement, not even a full basis point at 276.81. And NYMEX crude not even moving that much, still holding at that $90 level for a barrel of Texas Intermediate. Even Bitcoin is seeing like zero volatility right now, 23,100. It can't be understated, Danny, how important this CPI reading is, and traders are loath to make moves until the print.
And look, it's not just true in the U.S., it's certainly true in European trading as well. At first, we were getting that downdraft, that negativity from Asia, from the U.S. session because of the bad reports coming from Micron and those losses in semiconductors. But in the past half hour, Matt, we finally saw European indices flip positive. Now, we're just slightly positive. Again, it's this drift that we've seen over the past 2 hours as we get closer and closer to that monster data in terms of importance. So DAX, one of the outperformers, that along with the FTSE MIB up nearly 0.3%. A lot of just flat indices. UK is flat. CAC 40 is also flat. Now, we're also looking at not much happening in the euro either, still sitting firm versus the dollar at 102.18, but certainly one to watch when we get that CPI data. If it is hot, continue to see that dollar outperformance over the euro, considering we've already had a hike from the ECB. They can't go at it much faster than the US. And a reminder for all the folks out there, this is a global bond market. As we look at the U.S. 2s 10s curve invert pretty dramatically, the most since 2000. Yet again today, we've seen the UK 2s 10s curve invert as well. We're a -1 basis point. Worth reminding that, yes, the U.S., that is a good indicator of recession. There are a lot more technical issues going on here in the UK that doesn't make it as good of an indicator, but it just indicate this front loading of hikes that is expected throughout the globe. I should say New Zealand. That yield curve also turned negative as well. Finally, wanted to point out UK nat gas futures. Those are up 6%. There's concern that we might see rolling blackouts for industry and households in this country. A great scoop from Bloomberg late yesterday saying that in the worst case scenario, again, this is not the base case, but Kaylee, in the worst case scenario, there could be blackouts in the country.
Yeah, and we'll have more on the energy story in Europe and how drying rivers are exacerbating it in just a moment. But first, let's take a look at what is happening today. We'll get some Fed speak, including Chicago Fed President Charlie Evans and Minneapolis Fed President Neil Kashkari. What will they say about today's inflation data? Then on the earnings front, Disney will be reporting third quarter results after the bell. Russia CPI data will be released at 12 p.m. New York time. But of course, before that, the big event of the day, U.S. CPI data, 8:30 a.m. Eastern time. It's been called the most scrutinized economic report in the world, and it will give us a sense of where the fight against soaring inflation in the U.S. stands. Let's get more on that story now. Michael McKee, Bloomberg International Economics and Policy Correspondent, joins us for a look at what to expect. It is also his birthday today, so happy birthday, Mike.
Thank you.
Your gift is inflation data.
Oh boy, how lucky I am. Matt was talking about how the markets around the world are holding their breath. What's going to make them exhale? Well, they'd like to see some progress made on inflation, some sort of peak. And as Kaylee said, that'll be about the core. We do have some headline numbers that should go down because, of course, gasoline prices have been falling since June 14th, and that takes away a lot from the headline numbers. We're also seeing agricultural commodities come down, so maybe food comes down, but that'll take a little bit. Used cars has been a bugaboo. That's sort of come down. So we're looking for some headline back off. The problem is with the core, and the core is driven a lot by housing. And you can see this line is the one that's not going in the same direction. That is rents, and that is a problem that tells us that core inflation is going to be high for a while. The markets are leaning maybe a little bit higher than they were in terms of the numbers. Right now we're expecting 8.7%, a little bit of a drop for the headline, but it's that core that's going to bother people. While we, on a sequential basis, maybe have a decline, the year-over-year number is expected to rise, and that'll keep the Fed on notice. Now, if we get a much bigger number than any of these, that'll start the talk again about the Fed maybe going 75 or even 100 basis points in September. If we get these numbers, we can talk about 50 and everybody can exhale.
All right, well, we are definitely glued to the screen. Mike McKee, thanks very much for joining us. We'll be revisiting with you all day long. Happy birthday, by the way. Now, Bloomberg has learned that the U.S. Justice Department is preparing to sue Google for allegedly illegally dominating the digital ad market. The suit could be filed as soon as next month. It would be the DOJ's second case against Google after its 2020 antitrust lawsuit. Emily Wilkins, Bloomberg government reporter, joins us now out of Washington, D.C. with the details. So, Emily, what do we know so far about this, this probe?
So Bloomberg has reported that Justice Department officials have been going back and conducting additional interviews with publishers, with competitors for Google. And this really gives us an indication that that second lawsuit now on ads might be coming. Google had about 28% of all digital ad revenue in the last year. And there are some major concerns about exactly what their dominance is of the market and if they are using fair practices. And this is really part of a much bigger federal investigation that we have seen into not just companies like Google, but also companies like Meta, and whether they are violating antitrust provisions and whether they are really playing fair in the digital market.
We also have some breaking news just coming across the Bloomberg terminal. Emily, Donald Trump is confirming now that he will testify today in a New York, he will testify today in a New York probe. What do we know about the Attorney General looking into the former president and how he has pushed so hard against this?
So this is one of just a number of probes that are currently going on against a former President Trump. We know that there's one from the Justice Department. We know that there's one from the January 6th panel. We know that there's also this one from the New York Attorney General. And the fact that we are going to now hearing this breaking news that Trump is going to cooperate as well as testify, I think it kind of shows how much the former administration is taking these investigations seriously, that they are participating, that they are going along with things at this point. Certainly, you've seen Trump resist efforts to be interviewed by other groups and organizations that have reached out to him during this point. It's just been a very interesting week for Trump. I mean, given the FBI raid on his Florida home in Mar-a-Lago, looking for documents there, as well as the news yesterday that a federal appeals court is going to allow a congressional committee to get copies of Trump's tax returns, something they were searching for about 6 years. So very interesting to be following all these investigations right now.
Yeah, an interesting week, certainly, to put it lightly. Emily, thanks so much. Bloomberg government's Emily Wilkins. To Elon Musk, who sold a record $6.9 billion of stock in Tesla. Bloomberg Quick Takes Alex Webb joins us more for now on the latest move by the world's richest person. Alex, I mean, it doesn't feel like that long ago that Musk said he was done selling shares of Tesla. So is he finally done now?
Well, maybe in his mind he is done for now. Things can always change. For now is a very subjective term. Look, you've seen the share price of Tesla recover about 30% from its trough it almost dipped below 600 a few months ago. It's now up in the high 90s. That's clearly then good news. And if he has to cover some costs going forward, even if he doesn't have to buy Twitter as a whole, he may well have to pay a assessment fee of perhaps in the order of $10 billion. So covering some of those costs may not be a bad idea. You might then infer that this is a selling signal if you're a Tesla investor, because perhaps he doesn't think the stock is going to continue to increase much further, particularly as we look towards CPI numbers. Well, actually, the stock's called 3% higher today. Perhaps there's a little bit of overhang. There was concern that he was going to have to sell down an even greater amount of the stock. There is a certain amount of clarity on that, as you say, for now. And so we've seen a positive reaction in the pre-market trading.
All right, Bloomberg Quick Takes Alex Webb on Elon Musk, Tesla, and Twitter. Now let's get to the Rhine River. It is set to become virtually impassable at a key waypoint in Germany. Shallow waters will effectively halt shipments of energy products and other industrial commodities. It's one of Europe's most important waterways, and it's about to be almost just a foot deep. Chris Ryder, senior editor for Bloomberg, joins us out of Berlin. So, Chris, how big of a disaster is this going to be for energy transports?
Well, it comes at a terrible time, obviously, for the European economy and for Germany. You have the Rhine River more important than ever right now because it's a key conduit for coal that is needed to offset missing Russian gas supplies. So it's a terrible time for the Rhine to be stuck. That's where we are right now. But it's obviously not the only river. Like these issues are affecting waterways across the continent.
All right, Chris, thank you very much. Bloomberg's Chris Ryder there reporting from Berlin. And we're going to get more on Europe's dying rivers later this hour when we focus in on today's Big Take, of course. You can always get that by heading to NI Big Take Go. To Kenya, where authorities have begun counting ballots in one of the closest presidential elections since the country reintroduced multi-party democracy 3 decades ago. Bloomberg's Jennifer Zabazaja joins us from Nairobi. So, Jennifer, we have counting underway. What do we know at the moment?
Yeah, Danny, counting is underway. We're still really early on. Right now, only about a little over 15% of the vote, 2 million votes have been counted. Right now, Deputy President William Ruto is slightly taking a lead over Raila Odinga. But as you mentioned, it's still really early on. But what's interesting is sort of how this election is affecting the markets. What we saw going into the election is that the market was very jittery, very nervous. We saw the shilling depreciate more than it has in about a year. Right now, what we're seeing is the Kenyan shilling go up to the highest that it's been in about 4 months. Stocks are up the most that they've been in a month. We've seen bond yields come down. And so it signals to us that maybe investors are a little bit less concerned about the ease that there was around what was to happen after this election. But right now, if you just look on the streets of Nairobi, it's very quiet. People have gone back to work after being off for election day. But the next leader is really going to be focused, as you guys are all day today on Bloomberg TV, focused on inflation. Inflation here in Kenya, 8.3%, affects people much differently here. And so the next leader is going to have to figure out how to deal with a hunger crisis in addition to dealing with Kenya's mounting pile of debt, which right now is about $72 billion. And depending on what we see from US CPI and then what the Fed does, that could then put even more pressure on Kenya. Danny.
All right, inflation, a global story indeed. Bloomberg's Jennifer Zabazaja reporting from Nairobi. Thank you so much. In earnings news, it was a massive miss for Coinbase. The largest U.S. crypto exchange reported lower than expected revenue and also posted a record $1.1 billion second quarter loss. The chief operating officer, Emily Choi, spoke exclusively with Bloomberg after the results.
I think it was a rough quarter for most companies. In the crypto space, we obviously had some big episodic events that happened during the quarter. And so some of those asset prices shrunk, which then impacts things like the assets on platform and other numbers.
So clearly the crypto winter is impacting Coinbase in a negative way, and those results are having a negative impact on the shares in pre-market trading this morning. That stock is down more than 7% before the bell. It is an even bigger decline, though, for Roblox, the video game company. It also reported after the bell. Bookings missing expectations really goes to show you that the pandemic boom in video game playing is starting to fade. That stock is down about 13% before the bell. One more positive story out there, though, is an advertising technology company, Trade Desk. We had talked so much about the headwinds in the advertising environment given the deteriorating macro picture, and yet the company is working through that. One analyst calling its results uniquely strong as it beat expectations both in the quarter reported and on the guidance, and as a result, that stock is up 16.5% before the bell, Danny.
All right, Kaylee, good stuff there. Just want to bring us a breaking hot headline crossing the terminal mole. It's a Hungarian refiner saying that they will pay Russia's transit fee to Ukraine to restart crude flow. Of course, that had been halted given the tension between European countries and Russia. But again, they are going to pay a fee in order to get that flow of gas continuing. We'll continue to take a look at European gas Russian story. It's, of course, on the minds of us in the U.S. Ed Clissold, we'll speak to him about it, chief U.S. strategist at Ned Davis Research. That's coming up later. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan.
In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Big Tech reports earnings.
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this.
The fact that they are not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Danny Berger out of London. Now, a lot of attention, obviously all the attention this morning is on inflation. We're going to be looking at that CPI data. And as Kaylee pointed out, there's going to be this time more focus on the core than there is on the headline number. Within that is transportation. And that's been overshadowed a bit by shelter lately, especially if you look at Fed minutes or mentions by Jay Powell. But transportation has been a much bigger uplift on the number, and it's due to get cut big time this month. Simon White of Bloomberg Markets Live joins us now. So, Simon, explain the transportation expectations vis-a-vis shelter.
Yeah, sure. I mean, shelter gets a lot of the kind of like the coverage because it's got the biggest weight in CPI. But if you actually look at what's driving CPI right now, not just like most of the headline number, but a lot of the volatility is coming from the transport component. So I'll be looking to that today to see if it leads to some sort of decline. I mean, we're expecting a slight decline, and I think transport is going to be the place where you might be able to see that.
It does just feel like such a binary outcome of if it's cold, if it's hot, in the market reaction. When it comes to where has the fattest tail and what's the most mispriced in this market, where would we see the most volatility around, the most need to change positioning in this market, depending on what the number is?
Well, I think yields, obviously. I think the market is now kind of looking for this kind of move lower in CPI. We'll get probably a much bigger dip in yields. But I think that's the shorter term picture. I mean, I think inflation is really a play in three acts. First act is we get the rise in inflation. The second act, we get the lull, perhaps a premature easing in the Fed. Everyone thinks inflation's okay again, but then that lays the groundwork for a much larger rise in CPI that requires much bigger hikes, and I think than anyone is really anticipating to get the inflation toothpaste back in the tube.
Yeah, it would certainly throw into question that pricing that we're going to be cutting in 2023. Simon, great stuff as always. Simon White of Bloomberg Markets Live. And for more analysis from Simon, from the rest of the Markets Live team, check out MLI Vico on your terminal. This is Bloomberg.
as you look at the company you've created, how do you think you're having an impact on the world for the betterment of the world?
We are by far and away the best positioned entity to solve the question as to what does the human genome mean and how can you apply it to individuals.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehra to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, today on Bloomberg. Brought to you by Workday.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Danny Berger in London. Anna Edwards is off today. Now, keeping you up to date with news from around the world, here's the first word. Republicans are rallying around former President Trump in the wake of federal agents searching his home in Florida. Former members of Congress to potential presidential rivals in 2024, like Florida Governor Ron DeSantis, echoed the assertion that the search was politically motivated. FBI agents searched the Mar-a-Lago residence as part of an investigation into missing classified records. It's another blow to Europe's energy security. Russian oil flows through Ukraine to Hungary, Slovakia, and the Czech Republic were halted because sanctions prevented payment of a transit fee. A Hungarian refiner says it's paying the transit fee to Ukraine itself to get the oil flowing. In the UK, households are already almost $1.6 billion in debt to their energy suppliers before winter, and that's when bills are set to surge again. British consumers typically build up credit with their providers during the summer when energy usage eases. That limits the shock of higher demand in the winter. But soaring gas prices and power prices have made this summer expensive. And in China, inflation accelerated in July to the highest level in 2 years. The consumer price index rose 2.7% last month from a year earlier. The big reason? Pork prices soared more than 20%. Still, weak consumer demand kept overall price pressures in check. And of course, while we've gotten inflation data out of China, Matt, we're still awaiting the inflation data here in the U.S. That's what it's all about today, that print at 8:30 a.m. Eastern.
Yeah, absolutely. We are going to be paying attention to everything from pork bellies to transport. The CPI number could be a huge driver for the Fed's rate hike path.
Yep, and we'll talk more about that coming up next. Ed Klissel, Chief U.S. Strategist at Ned Davis Research, will be joining us. This is Bloomberg.
one of the most fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, so the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The fight against inflation, the latest U.S. Consumer Price Index, is out today, 8:30 a.m. New York time. Elon Musk hedges his bets. The world's richest person sells a record amount of Tesla in case he's forced to go ahead with his deal to buy Twitter. And the great rivers of Europe run dry. From the Rhine to the Danube, crucial trade routes are on the verge of becoming impassable. I'm Danny Berger in London with Matt Miller and Kaylee Lines in New York. Anna Edwards is off today. Matt, I don't know if we can read too much into the moves we're seeing this morning in this market, given, everything could change depending on what happens with that CPI number out.
Yeah, no, absolutely. And there aren't really very big moves in markets so far.
True.
We have futures that are up about 0.25% right now, and the 10-year is coming down almost 2 basis points to 276.08 as investors buy that debt. But of course, this CPI print is crucial. I'm focused on the headline number because I have a bet with Kriti Gupta that last month was the peak, and we're looking for 8.7% compared to 9.1% last month. But the Fed, and I think a lot of other people, including markets, are going to be more focused on the core because we know that gas prices have come down. We know that food prices have come down a little bit. They're still high, but they've come off a little. NYMEX crude, as an example, is trading around $90 a barrel and has been for days now. $89.89 is the price exactly for a barrel of West Texas Intermediate. And Bitcoin really not moving at all. It's typically a very correlated asset. You can even look at it for a tell as to where we're going to be at the open, but not today. $23,097 and not gone far in the last 12 hours. Kaylee, what do you see in terms of the pre-market movers?
Well, I have to begin with Tesla because, as Danny mentioned, we had news overnight that Elon Musk had its biggest share sale ever, selling off nearly $7 billion of his Tesla stock just to avoid a fire sale in the chance that he does indeed have to go ahead with his $44 billion deal to buy Twitter. After that, Tesla shares are actually on the rise, up about 2.5%, and Twitter is as well. That stock is higher by nearly 4% in early hours. It's a less positive story, though, for Coinbase. Reported earnings after the bell last night, or really, I should say, a record loss of $1.1 billion, plus revenue and trading volumes missed estimates. So did user growth forecast. So as a result, that stock is down 7.2%. The crypto winter weighing heavily on that company. And of course, crypto, one of the more speculative areas of the market out there. Another one is those meme stocks that have seen quite a resurgence in recent weeks. Bed Bath & Beyond was up 9 days, 156% until yesterday when it actually fell about 14%, snapping that winning streak. Just a little bit of buying coming back in this morning, though, Danny, up about 0.2% before the bell.
Love it. On a day where CPI could potentially make the Fed be more aggressive and perhaps punish some of those bubbly stocks, you get it moving back up. Well, Kaylee, we are just narrowly avoiding the dreaded unsht when it comes to this European benchmark index. Europe Stock 600, it is up just 0.06%. It opened up to the downside, so it has turned around, but volumes are light. We're awaiting that U.S. data. Same goes for the euro. Not a lot of action here, trading at 102.30, up about 0.2% versus the dollar. But can that last if we get a strong CPI number? Will King Dollar rear its head once again? And because the U.S. 2s10s yield curve, that is inverted, we're starting to see the global bond market catch up to it. New Zealand, not that long ago, also flipped to an inverted yield curve. And now we've seen the UK 2s10s curve. That has just inverted again. It did that earlier this month after the BOE decision, went back positive. Now it's back negative again. So a lot of back and forth. Doesn't necessarily mean recession, but it does indicate that front loading of rate hikes. Finally, nat gas here in the UK, prices of those up nearly 7%. As we head into the winter, this is going to be a critical price to watch. A great Bloomberg scoop out yesterday that come the winter, the UK is preparing for a worst case scenario. When this gets really expensive, the price of energy, and at the same time, a really cold winter, that could potentially mean, Matt, that there are rolling blackouts for both industry and households in the UK.
All right, so very close watch still on the energy crisis in Europe. Let's bring the focus, though, back to the U.S. ahead of this CPI print. Ed Clissold joins us, Chief U.S. Strategist at Ned Davis Research. Ed, you know, this CPI number seems very important. What are you focused on, and what do you expect?
Well, yeah, so consensus is calling for a drop in the overall rate. But we're really focused on the core because we all know that food and energy prices have come down over the last month. But in particular, we're focused on core services, which were up about 5.5% year over year as of last month. And that's going to really get at what the consumer is dealing with. The services part of inflation is stickier because if somebody perhaps raises the price of a haircut because it costs them more to drive to work, they're not going to lower that if oil prices come back down. They're going to keep it there. And so that's what the Fed is so concerned about, and therefore that's what we're looking at as well.
What do you expect the Fed to do? I mean, it seems to me that every Fed speaker in the last few weeks has been telling Mr. Market, no, we're serious. We're really going to continue hiking rates. We're not going to turn around and go back down at the beginning of 23, but the market doesn't believe them.
Yeah, I think the Fed has to keep that message until they really are ready to make the change, because this is the expectations game. Powell has said, he would love to do a 94 type of tightening cycle. That's the gold standard, where they tightened and then turned around before we went into recession. But given the option, he'd rather be Volcker in the early 80s and cause a recession than the late 70s when the Fed was behind the curve the whole way. So they have to talk tough.
Better Volcker than Burns.
Absolutely. So that's what they're going to try to do here. And so I don't think the message is going to change, but I think they're signaling they're serious about 75 basis points at the next meeting for sure.
Okay, so clearly the equity market has been betting on that Fed pivot narrative. When you look at the bond market and a yield curve that's inverted by nearly 50 basis points, Ed, how reliable a signal is that?
Well, so what we're focused on is that we want to see lots of the different parts of the yield curve inverting. The 10-2s is very critical, of course, but we actually look at dozens of different yield curves, corporates, treasuries, different parts, the 2s, 5s, the 10-3 months, and we're at about 50%, but it needs to get a little bit higher to signal a recession. If you look at the last 3 or 4 recessions, if it gets above about 55% or so, that's the Rubicon line for saying the economy is likely to head into recession. I'd also point out that doesn't mean you're going to a recession immediately. There's usually a lead of a couple quarters before the recession takes place. So the yield curves all along the curve, corporate and treasuries, are telling us you really need to be on alert, but we're not there yet.
Okay, so we're not quite there. If and when we get there, Ed, what do you want to be buying in that kind of environment?
Yeah, so I think there's three different scenarios we've come up with. We'll use the Goldilocks and the three bears. We'll call it Jay Powell and the three bears for us. So the first one is too hot. That's when the Fed is forced to keep raising rates for a while because inflation stays too high. If that happens, we'll go into recession. Probably over the short term, we'll see new lows in the profit averages in the next couple of months. Too cold, which we think is the most likely scenario. That's if the Fed is able to pivot in the next couple of meetings because inflation comes down, but they've already done too much and the economy falls into recession next year, in which case you'll probably see new lows late this year or early next year before, and in the meantime, we'll get a really nice rally. And the third is just right. The Fed manages to pull this off, aka 1994, in which case the lows are probably in. But history says it's very hard for the Fed to pull off a tightening cycle without a recession, and this is harder than most. So call it a major rally now, and then potentially new lows into next year.
Can I hang on to that second scenario of your three bears, Ed, this idea that the Fed will have to pivot? I wonder how likely that is, even if we go into a recession, because I think of Zoltan Pozsar, for example, who points out that the global commodities market, it is just so tight, and that is unlikely to change anytime soon, which again means stubborn inflation. So even if we are in a recession, can the Fed afford to pivot, to start to cut rates when it needs slow down demand in order to bring it in line with where supply currently is?
Yeah, so now we have to talk about the dual mandate, right? You're absolutely right. The Fed needs to focus on inflation, but the Fed also has a mandate of full employment. And so jobless claims have started to tick up, still very low. But if the labor market loosens quite a bit, that would give the Fed some room. And keep in mind that the biggest input for most companies, the vast majority of companies, are wages. And so if the labor market loosens, then that would give the Fed the ability to pivot. And also a pivot could mean just 25 basis points a meeting, maybe taking a meeting off here or there. It doesn't mean that the tightening cycle is completely over. It just means that they're not nearly as hawkish as they are right now.
Well, when it comes to unemployment, how much signal are you taking? It's mostly tech companies, I realize, but every now and then we get a company reporting in this earnings season saying that they're freezing hiring or they're slowing it down. How much value do you assign to those headlines?
I think it's of note, but you're absolutely right, Danny. It's early days. The overall labor market is still very tight, and this is when we have to handicap for what's gone on over the last couple of years. Those tech companies were able to keep going and even expand during the height of the pandemic, whereas the parts of the economy that are adding jobs like crazy right now are the parts that were hit the hardest. So it's a very different labor market than we've had over the last couple of years, and so we'll have to look at both segments, not just one in isolation. Which I know that's not what you're saying, but we have to bifurcate the market here.
Ed, a reasonable and a whole picture view, as always. Great chatting with you. Ed Klissel, Chief U.S. Strategist at Ned Davis Research. Coming up, the Rhine River has dried up and will effectively be impassable at a key bottleneck come Friday. Up next, we're going to dig into just that. It's the topic of today's big take on Europe's drying rivers. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Danny Berger in London. Anna Edwards is off today. Well, from the Rhine to the Danube, Europe's water waves are failing at the worst possible moment as both the climate crisis and the continent's energy crisis worsen. That is the topic of today's Big Take. Jack Whittles, who co-wrote the story, joins us now for more. So, Jack, let's begin with the Rhine River, which has dried up and will be effectively impassable at a key bottleneck come Friday. Where is the water now, and how low is it forecast to go?
So the Rhine level at Calbe at the moment, it is 47 centimetres last time I checked. And it is forecast to go to the critical level of 40 centimetres on Friday. And then
Ignore Matt. Go ahead, Jack.
40 centimetres, just under 16 inches.
Got it.
There we go.
There you go. And then it's going to go as low as 37 centimetres on Saturday.
I love this. Not only have you brought the data with you, Jack, you've also got the translation for our American viewers. Okay, so that's the levels we're at, which, I mean, sound quite low, but put it in context for us. In terms of barges trying to get through these rivers, is it possible at those levels? Is it impossible? Where do we stand?
Right, so important to understand that when I say 40 centimetres, just under 16 inches, that's not literally how deep the river is. The river is significantly deeper than that. That's how they measure it. But when we hit that 40 centimetre level, it basically becomes impossible for a lot of barges that are carrying these vital commodities to get through Calbe, which is just to the west of Frankfurt. And there are still some specialist ones that can get through. The reason it becomes difficult is basically the more you load onto a barge, the lower it sits in the water. And so as the water gets shallower, you can carry less and less stuff. And we're now at the point where basically they'll run aground.
So that's exactly what I wanted to get to, Jack. That means that, you know, a smaller barge or a barge with fewer goods on it, or like the Kelly family, can pass through no problem. But when you start loading up a big barge with coal or with diesel fuel, those are the ones that cannot get through, right?
Yeah, so all the sort of commodity hauling barges, so coal, diesel, you know, big, heavy stuff, when it hits 40, it's pretty much uneconomical for those to get through. There are some special ones that are specially designed that will still be able to get through at lower water levels than 40.
Will they then ship the stuff on roads instead? Or are they going to, put these onto big 18-wheelers and just use the Autobahn?
Right, you can use road and rail as an alternative to the Rhine, but that is a lot more expensive. So it will depend on the economics of whether they'll actually do that.
And expensive at a point where energy is already pretty dang expensive for the continent. How does that feed into the crisis that Europe is already seeing?
Right. So, I mean, Europe is already in an energy crisis. And just to give you just a bit of context, so the Rhine, you know, it's about roughly 800 miles up from the Swiss Alps, all the way down to the North Sea. And there's so much stuff shipped along that river. You know, it's not just coal and diesel. It's iron ore, it's fertilizer, it's cement, it's gravel. There's all this stuff. And Europe is already facing an energy crisis and choking off those deliveries, because it's not just Calbe, where the Calbe is where it's at its worst, but it's all along the river. The amount that these barges can carry is limited. So the whole of Europe is essentially having its supply of these commodities choked off. You've had Switzerland has already had to release, or said it's releasing strategic oil reserves. So have Austria. Austria said the same. Hungary said the same. You know, Europe is supposed to have the lowest diesel stockpiles on record, or at least back to 2011, this
Right.
November, as we go into winter.
And it's so much more important, diesel fuel in Europe, than it is here. Although even here, obviously, for trucks, you have to have diesel. Jack, what kind of picture do you expect to see in and around Kaub, that town west of Frankfurt on the Rhine River, Friday or into the weekend? Are we going to see big traffic jams, the likes of which we saw in the Suez Canal?
Well, you know, barge owners, they are going to know. They're going to look at this forecast. They're going to have a good idea. So they're not going to be taken by surprise by this. What you might get is some barges that went through Kaub, and you know, because the water is then deeper on the other side, so they might start trading between like Switzerland and Kaub, that sort of more inland area. So you might sort of get two mini canals, if you see what I mean.
All right, Jack. Gonna have to end it there. Thank you so much. Great reporting, great big take out today. And if you want to read more of that from Jack Whittles and team, that's on NI Big Take. Go on your terminal, or you can get it on Bloomberg.com. More coming up. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
No one covers the world like Bloomberg.
Justice says they'll get to 7% in the coming months. Do you see that coming true?
There was something of a gray zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Bloomberg Green, bringing you the business, data, and innovators fighting climate change.
Reinventing climate news on TV, Quick Take, and Bloomberg.com.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Danny Berger in London. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us typically with the single best chart of the day. Tom, I have no idea what you could be looking at today. What are you focused on?
Well, I'm not looking at the level of the Rhine River. I'm looking at the level of inflation in America. And this is a rich story. We can really go forever on this, Matt. This is a huge report that we're going to see this morning. And the report is divided by headline and by core inflation, taking out gas and real estate, but it's also divided by the parts of the American economy. And the two great parts are goods, seen here in red, goods inflation, and service inflation. So let's look at this, Matt. Level service inflation with a move up during the pandemic, and we really haven't turned around service inflation yet. But to me, the interesting story to deal with Michael McKee on this morning at 8:30 is goods inflation, which has ballooned from deflation and disinflation up to a ginormous Matt Miller number and has rolled over substantially. Will that continue to roll over into 2023?
You know, you've been talking about this for a while, Tom, and the last time we had this discussion was 2 months ago when the 9.1% headline print came out. That led into a drumbeat over the weekend. We were looking for 50, then people started saying 75. On Monday, people started saying 100. And do you expect a similar kind of step up?
Well, the answer is we don't know until we see the data. What I would suggest is the parlor game is of little value except for those that are playing the parlor game. What matters to listeners and viewers is the idea of what's it mean for my pocketbook. And both numbers matter. Top line inflation looking at 8.7% and the core statistic at 6%. Both of those matter. Totally unacceptable. The single best chart I've seen in the research in the last week or 2 weeks is Bank of America, which has modeled glide paths, 4 different glide paths where we don't calm down until May of 2023. Matt, you're going to be turning in your truck for a new truck by May of 2023.
I'm going to be looking for an EV truck.
Yes.
Can't wait for Matt to drive that over to London and give us all a ride. And Tom, look, you've got a great lineup of guests to ask about this, but I got to say, it's not just the macro, it's the micro of Disney earnings as well. I know you got Michael Nathanson on the program as well.
We're going to do Disney on the back end, and of course, all that's going on in media as well, and particularly with the college rights.
Big Ten football.
The Big Ten football. Matt lived this as a kid, but Big Ten football is real in America, and Nathanson will brief me on that. But before that, Rabila Faruqa will join us here, and Marilyn Watson from BlackRock. I can't say this enough. The world of global Wall Street will stop at 8:30 this morning.
Absolutely, Tom. We'll all be focused on your program. Tom Keene there coming to us from Bloomberg. Surveillance begins in just 5 minutes' time. Danny, you know, I will also be focused on the Nathanson interview because I care whether or not I have to watch or get to watch Big Ten football on I think it's between CBS and ABC rather than ESPN. It makes a huge difference, and it's so much more important, or it's important to so many more people this coming season because we're going to have 14 teams in the Big Ten. So, you know, college football is huge business, and it's going to be a big dollar deal when it gets done.
Yeah, huge business, big money maker. And well, speaking of lots of money in sports, Matt, I mean, we didn't even talk about PGA and LIV today, that the PGA winning that court case that they can prevent some people from playing. I mean, look, I know that this is perhaps a general interest story, but this is a lot of money behind the new tournament, perhaps more money from the PGA or less money comparatively that these golfers are going to be missing out on.
Right. Well, I think it's a general interest story that a large portion of Wall Street cares about. A lot of golf fans. Obviously, a lot of tennis fans as well. We can finish up the sports chat with Serena.
I love it.
She has had such an illustrious career, one of the greatest athletes of all time, and we hope to see her go out on top as a champion at the U.S. Open.
Matt, I am so impressed that somehow in the last 5 minutes of this show, when we were talking about CPI, we've been able to just tie in a sports chat. I think that is true talent. And, you know, besides CPI, the most interesting thing as well. All right, well, that's it for us at Early Edition. More surveillance is up ahead. Again, all eyes move to the U.S. 8:30 a.m. That's when the CPI print hits. This is Bloomberg.
companies need to think about how they normalize Blackness and they normalize the Black aesthetic and what it really means to be inclusive. And that means to recognize and appreciate and respect and celebrate all aspects of culture and different cultures. And so it's critically important that we recognize that this is an issue, just as my sisters have said, and make sure that we recognize how that issue shows up in the workplace and how we can be advocates and allies in action to ensure that no person, no Black person in this country feels marginalized or disrespected or diminished in any way because of their hair or their race.
So the challenge is not everyone understands that race-based hair discrimination is a reality. And so we find ourselves constantly educating people, including lawmakers, to ensure that they understand that hair discrimination is racial discrimination. And so we are working collaboratively, the four of us championing this work together, along with the Crown Coalition, to ensure that race-based hair discrimination is outlawed nationwide.
Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
For the Fed right now, it actually might be easier for them to continue to attack or at least try to bring under control this inflation issue.
The Fed is open-minded, as the Fed always is.
We are at an important inflection point in the inflation story.
If you look at the 25% decline early in the year, I think that was the baking in of a mild recession.
The economy is not out of the woods.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. An historic Wednesday, a statement on inflation in America. Kaylee Lyons in for John Farrow. I talked to Farrow yesterday, stuck in Rome off the Italo train from Naples. He's trying to get back home. He's coming out of FCO, Lisa, and it looks to be a struggle. Lisa, let's get right to it on inflation. Your observation as we go to 8:30 this morning.
It's going to be about the headline CPI number. It's going to be about the core CPI number. Then it's going to be the read through to the real economy, real wages, which we also get at 8:30 a.m. How negative do they go? They are currently the most negative in data going back to 2007, which is what we're hearing about on the margins with disposable income evaporating.
I agree with you. Real wages underplayed here and very, very important as well. I like what Alan Ruskin says at Deutsche Bank. We're going to give you some of the research done here in the last 12 hours. Again, that's what surveillance does. And he has with Deutsche Bank December CPI above 4%. Lisa, the most important chart I saw, thank you Zero Hedge for bringing it to my attention, was Bank of America with 4 glide paths. We have inflation, Lisa, back nicely into the second quarter 2023.
This is the issue, and you've raised this many times, Tom, and you're right to do so. At what point does the Fed signal we're done or we can start moving away? How far down do we get? And then you've talked about how do we get from 4% to 3%? It's a big leap. Right now, we're looking at a broadening out of some of the inflation inputs and where people see it going. That's why we're watching Fed speak today and going forward.
Kaylee, the inflation here is about the core, the trimmed, all the fancy global Wall Street. But for America, it's a number that's shocking and harkens back to the early 1980s.
Yeah, the American people feeling this in every way. And Jerome Powell has recognized that, which is why initially he said the Fed is responding to headline inflation. But as Lisa and you both have mentioned, it is going to be more about the core today. And of course, inflation, Tom, is going to inform the Fed's policy path, how high that terminal rate ultimately is. And the research out of Bank of America overnight, if that terminal rate is priced at 4% or more, we could be looking at a yield curve that inverts more deeply, possibly down to negative 85 basis points. That is just astounding. We haven't seen that since the 80s.
We're going to go over the curve inversion here in a bit, negative 48 basis points right now. Lisa, we have to pause the show and bring it to a complete halt on radio and television for our auction update. We had a 3-year auction yesterday, a 10-year auction today that I don't care about. Let's do auction talk with Bramo. What's the so what on this, Lisa?
You actually saw our lowest ever dealer uptake of the 3-year note yesterday. Basically, people are starting to see value at the front end that perhaps it's fully priced what the Fed is going to do. Today, we get $35 billion of 10-year notes. The reason why this is interesting is where is the conviction trade at a time where the Fed is going to have to do more? We're going to get a CPI print that may show peak inflation. It may not, according to some. And so then where do you go when you look at bond duration and we look at some of the exposures, people going into the long end? Today, we'll see.
We're going to address that in a moment with Chris Verone, not the equity market, but Verone focused on the bond market. Let me look at the data right now. Futures up 9, Dow futures up 62, NASDAQ green on the screen across. The VIX has really churned here for the last number of days, waiting for 8:30 this morning, 22.19 on the VIX. In the fixed income space, I really don't know what to say. 3.25% in the 2-year yield, and the inversion, which we'll touch through the show, negative 48 basis points is extraordinary. Ian Lingen at BMO Capital frames out technicals that get a further inversion out to negative 56 basis points. I haven't even seen that number yet. Thank you, Ian, for bringing that to our attention. Oil pulls back from the drama yesterday in Russian oil pipeline. And now for some drama, the brief of the morning with the Bramowitz.
Oh, incredible drama. 8:30 a.m. It will be dramatic. The U.S. July CPI figure, consumer price inflation. How much do we see that headline number being the one that people focus on, that the Fed focuses on as they talk about the deceleration in inflation? The headline number is expected to come down because of oil and gas prices coming down. However, core CPI expected to potentially even accelerate, and real wages, as I was mentioning earlier, they have gone to the lowest going back to 2007. That's how far this data goes back, with nearly negative 4% real wages. That is how much the disposable income is going down for households in America as a result of the high inflation and wages not keeping pace. We're going to speak with Brian Deese from the president's cabinet later this morning. What does he say about this? 10:30 a.m. we get EIA crude oil inventory report as we take a look at how tight the supplies are. Tom, you were saying that oil prices are coming down just a touch today. How do we dovetail this expectation for a fall off in demand with the real-time data, which is inconclusive? Today, we get a host of Fed speak, including Chicago Fed President Charlie Evans at 11 a.m. and Minneapolis Fed President Neil Kashkari at 2 p.m. alongside BlackRock's Larry Fink and Larry Summers, the former Treasury Secretary of the United States. Tom, we're not getting forward guidance anymore, except we are getting forward guidance. How do they spin what we've gotten at 8:30 a.m.?
You absolutely nailed it. They're absolutely addicted. Get in front of the mics and pontificate about where we're going. I yearn for the days of Greenspan silence. It was harder for Chris Verone in the time of Alan Greenspan. You just had to really glean what the Fed was doing. Christopher Verone is with MacroStrategy. It's Strategas, a Baird company. We welcome him this morning. Chris, you turn your note upside down. It's not about the equity market. It's about the bond market. Technically, you see 2-year yields moving higher. Discuss.
Yeah, I think the idea that the bond market buys this idea of a Fed pivot, we just don't see it on the charts. I mean, 2-year yields are basically back at the highs. If you look at the Fed Fund futures for, say, next March, they're already back to 4%. We went back and we looked at every single tightening cycle back to the early 70s. We cannot find a tightening cycle where the Fed funds rate ultimately didn't end above the rate of inflation. So this idea of peak inflation, that's just a math problem to us. I'm not sure it's investable. Even if you get CPI lower here over the next 12 months to 7 or to 5 or to 4, you still need a Fed funds rate above the rate of inflation. That's what the history has shown us. I think that's what the 2-year yield is reflecting. I think that's what the shape of the yield curve is reflecting here as well. And it's very contradictory to the message from the market the last 5, 6, 7 weeks. So we have an equity market responding to this. I now think overbought, at resistance, in a downtrend. I just don't love the risk reward here on bonds or stocks.
Okay, so Chris, when you say overbought when it comes to stocks, I wonder how far you see the downdraft that is to come if your view is confirmed that the Fed has to raise rates a lot more and that the market has not yet gotten that reality check.
Yeah, I think it's certainly a good question here, and I think what's been notable the last, let's call it 2 months as the market rallied, this has not been a rising tide. I mean, just look at the tape the last week or two. This is not every group, every stock, every index working. We see the weakness in China. We see the weakness the last couple days in semis. We see, I think, frankly, some of the growth in tech rallies starting to fray here a little bit as well. So I think this is more about risk reward. We're into resistance. Let's call it 4150, 4200 on the S&P. I think lower here makes more sense. We'll see if that's right or wrong, but this has not been a rising tide, this rally. That's what I think is most important.
But Chris, where's the floor then?
So our view all year has been everything's going back to where it was pre-COVID, and you're talking about 32, 3,400 on the S&P kind of gets you back to those pre-COVID levels. That's still our view here. Clearly, the market's challenged that over the last 5 or 6 weeks. But S&P up 15% over the last 30 days, right? That is an average bear market rally. So we haven't seen anything as extraordinary or remarkable to say, hey, this move's an outlier, this is something new. So we're sticking with the view that this is still a downtrend. I don't like the risk reward up here.
Chris, a core issue in technical analysis is how do you do a stochastic time series? What that means, folks, is a pointy series that goes up and makes a sharp point or comes down and makes a sharp point. And Chris, that is a 2-10 spread, is a vanilla spread of curve inversion. How do you study the 2-10 spread if it's so pointy up and down?
Well, I mean, we have to go back to April of 2000, the last time we had 2s and 10s kind of in this category of negative 50 or so basis points. But I think what's important here, when you look at the history of the curve, believe it or not, the curve tends to get this inverted pre-recessionary, not during a recession. Actually, as you begin to enter an economic slowdown or a recession, actually the curve tends to steepen. So that first steepening that you see as the economy slows is not a bullish steepening. It's actually a message that, hey, the economy is slowing. So I want to be careful here if the curve steepened over the next couple months. I don't want to misinterpret that. It would be normal for the curve to steepen into a slowdown.
Chris, thank you so much. Christopher Verone getting us started strong here with Strategas, a Baird company. Lisa, I want to dive into what we see when we parse inflation. I did it in the 5 o'clock hour, goods and services. How will you parse inflation this morning?
That's a great way to parse it because we've seen goods roll off. How much do services maintain that? I'm going to parse it between rent, between medical expenses, and then on the flip side, oil prices, which we know have been declining, and food prices, which on the margins also have been declining. And that goes to the core argument. The core is going to be so important because of those sticky aspects, that roving inflation that continues.
Off of a 3% owner's equivalent rent, we are out about 3.6 standard deviations. That's been the spike in the rental, the living component that we have. And Kaylee, everyone's living that coast to coast. To me, socially, and for President Biden, that's the key statistic.
It is, and it's a political one as well, Tom. As we get closer and closer to November, that is what the American people are feeling, and what a large majority of them are going to end up voting on is the state of the economy that they feel. And yes, the president has notched some points in his camp with gas prices coming down with that Inflation Reduction Act that has now been passed by the Senate. Is that enough, though, when we're still talking about prices that maybe aren't accelerating as fast, but are still growing?
I want to tell you about this morning, folks. We're really excited about the show. We've cleared out before the 8:30 report for the true expertise of Michael McKee. He will join us for that entire section to get you ready for the inflation statistics. Emily Wilkins from Washington on the shock of Mar-a-Lago that we've seen in the last 24 hours. And, of course, David Stubbs will join us from J.P. Morgan Private Bank. This historic day, an inflation report.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In New York, former President Trump says he will be questioned today under oath about his dealings as a real estate mogul. The investigation involves claims that the Trump organization misstated the value of its prized assets for tax reasons. That comes 2 days after federal investigators searched the former president's home in Florida. Republicans echoed the assertion that the search was politically motivated. What's been called the most scrutinized economic report in the world comes out this morning, and it will give us a sense of where the fight against soaring inflation in the U.S. stands. According to a Bloomberg survey, the consumer price index probably increased at an annualized rate of 8.7% in July. That's down from June's figure, but still way above the Fed's 2% target. The CPI is out at 8:30 a.m. New York time. China has ended those unprecedented military exercises near Taiwan, but it says it plans to conduct regular patrols in the region. The Chinese began the drills last week after U.S. House Speaker Nancy Pelosi defied Beijing and visited Taiwan. Elon Musk has sold $6.9 billion of stock in Tesla, his biggest sale ever. The world's richest person says he wants to avoid a last-minute sell-off of the car maker's shares in case he's forced to go ahead with his deal to buy Twitter. Musk says he'll buy Tesla shares again if the deal doesn't close. And Bloomberg has learned that the U.S. Justice Department is preparing to sue Google for allegedly illegally dominating the digital ad market. The suit could be filed as soon as next month. 2 years ago, the Justice Department sued Google in a case involving online search. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size is because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. When big tech reports earnings.
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this.
The fact that they are not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority.
From New York
City.
When you're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Street prepares for the latest read on inflation.
We're all pumped for a happy CPI day.
Will headline inflation ease as expected?
If you get something that comes in much lighter, this rally that we're seeing, we think it will continue.
Instant reaction on Bloomberg surveillance.
That headline CPI figure.
That's going to be a scary number.
That is an upside surprise.
And what it means for the Fed.
The Fed is not about to pivot.
Powell is willing to push this as far as needed.
Inflation in focus today on Bloomberg.
Got to believe that to go after a former president's home with a warrant, you have got to have the highest level of concern supporting and that essentially justified by the probable cause finding. And I think that's the judgment that is telling here.
Someone qualified. It's always good to speak to someone like Donald Ayer, former U.S. Deputy Attorney General there, on a hugely historic and emotional day for America yesterday, the search of a president's residence for documents, and of course that in Mar-a-Lago in Florida. We're going to focus on this now with Emily Wilkins, sort of day two after we pick up the debris. Emily, people publishing, reporting Axios moments ago, Greg Valliere moments ago, CNN moments ago, and on and on. It seems to be a day of discovery. What is the biggest mystery we are trying to discover day two?
Well, one of the big things they're trying to figure out is what led to this search warrant in Mar-a-Lago. You are hearing from Republicans, particularly, I'm thinking like Mitch McConnell, has come out and said, hey, this search warrant, this is a big deal, this is unprecedented, and we need to know exactly what they're looking for. Now, at this point, we're seeing a number of reporting come out saying that it seems that Trump, when he left the White House, took documents with him that should have been kept within the federal government's care, kept within the National Archives. Remember, earlier, actually, folks from the National Archives came and retrieved about 15 boxes of papers from Mar-a-Lago. The Washington Post has reported that additional boxes were removed after the search yesterday. And so that seems to be one aspect of what they're looking into. I think kind of a big question, though, is what is in these documents, and is there anything in particular there that might segue into all these other investigations currently looking at Trump?
Civics 101, can the president apply pressure on the Attorney General to say this time is different off the Presidential Records Act of 1978? And can Biden say to Garland, let's get visible on this and at least explain what we're doing? Is that feasible?
So obviously, Merrick Garland is a part of Biden's cabinet. At the same point, Biden has really tried to take a bit of a hands-off approach with the Attorney General. Remember, we did see Trump try and put a lot of pressure on his Attorney General when he was in office. Biden's trying to really break with that, say, no, Merrick Garland is going to do what Merrick Garland needs to do. At the same point, I think that there are kind of rising questions around the transparency around this. And I think it's valid to ask whether the current White House would be benefited by trying to get more of that transparency as far as why the search was conducted, what they were looking for, and if there's going to be more revelations from that come from whatever documentation they were looking for.
As you mentioned, Emily, a lot of people are expecting President Biden to punt this issue to the Department of Justice, saying it is their terrain and they are independent. He also has enough on his hands. Today, we're about to get a CPI report that highlights perhaps we've seen peak inflation, but that it's decelerating not to anything that is comfortable. Still 8.7% is the overall assumption. How are they planning to position this? What's their arguing point?
So Democrats are very well aware that inflation is going to be an issue that absolutely dominates the November elections. It's not going to be in their favor. It's really helping out Republicans right now. You're seeing so many Republican candidates and lawmakers really say, hey, you need to elect us this November so we can get inflation down. Democrats have really taken the tact of looking at the CHIPS bill that they just passed, as well as that tax and climate bill that was passed in the Senate last week, is now going to be taken up by the House this Friday, and say, look, we're moving this major legislation. It's going to lower costs. It's going to lower prescription drug costs. It's going to lower energy costs. And through this, we're going to be able to provide relief to American families. So that's kind of what Democrats answer. It's not necessarily that they're going after inflation per se, but they're trying to go after the day-to-day things that most Americans buy.
Emily, you raised that the House still has to vote on the Inflation Reduction Act, and it strikes me that there were a number of lawmakers from high-tax states, like here in the tri-state area of New York and New Jersey, that were adamant about the SALT cap, and yet that is not included in this bill. They're expected to vote yes all the same. I wonder how that plays for them in their home districts.
I think that's a really great question, Kaylee. I mean, obviously, it's a huge issue for a lot of folks in the New Jersey and New York areas. At the same point, all these lawmakers were looking at a reality just a few weeks ago that they weren't going to get anything done on this particular issue. Nothing more on healthcare, nothing more on climate, nothing more on taxes. Now they actually have something. And I think for a lot of lawmakers, the ability to have something to go home and tell their constituents about beats having nothing, even if it doesn't have everything they wanted. I mean, let's be clear, there is a lot that was left out of this bill on the cutting room floor. A lot of voters understand that Democrats aren't getting through everything they initially promised. But again, this is way more than we were expecting even a month ago.
But Emily, do they go home to a dialogue forever changed yesterday with the search of a president's residence?
I think obviously the search is unprecedented. It is a huge news story. On the other hand, it's not something that really impacts Americans in their day-to-day lives. Certainly for those who are maybe hardcore Republicans, hardcore Democrats will have thoughts and feelings about this one. But when you talk with lawmakers, particularly those who are running in the most difficult campaigns, the first thing they'll tell you off the bat is kitchen table issues. And whatever happened down in Mar-a-Lago this week isn't really impacting the average American family.
Emily Wilkins, thank you so much. Greatly appreciate it this morning with a brief there on the news of Washington. Futures up 10, Dow futures up 73 in the VIX with that big churn around a 22-point. Lisa, we've hardly mentioned the equity market. Julian Emanuel over at Evercore ISI has really been outstanding about keeping track of the beans. And I'm sorry, revenue growth in reported earnings has been double-digit, big inflation affected.
Yeah, it's been inflation affected, and for now, it's been relatively strong. It's been fascinating to see how even within the same shop, you have different strategists who are arguing against each other. And Julian Emanuel, one of his colleagues at BTIG, account among those that do have conflicting narratives. This is a faith-based market in terms of where earnings margins are going to go. Yes, they've held in so far, but we've heard from Mike Wilson at Morgan Stanley saying they're going to shrink. A lot of people looking at productivity, how much it's declining. A lot of people looking at the producer prices we're going to get tomorrow, CPI we're going to get today, putting it together and saying something's got to give.
But I'm glad you bring this up, Lisa. I've been remiss on this. Productivity, I'm going to call it a 3-ratio dynamic. A lot of moving parts here. But Kaylee, what mattered yesterday was unit labor costs, which goes to what Lisa mentioned earlier, which is your wage after inflation isn't so good.
Yeah, and that's going to be something crucial to watch as we have a conversation about whether the United States is heading toward a wage price spiral, Tom. Those labor costs are going to be critical, especially in services, as we watch the services metric in the CPI today.
We'll do that at 8:30 here in 2 hours. Right now, dollar fractionally weaker. I don't want to make a big deal. Euro explodes out to a 102. That'll help John Farrow as he tries to get a plane back from Rome. So we'll see how that...
You're lobbying him?
Send him the Gulf Stream, Tom.
Inflation in 2 hours. Stay with us on radio, on television.
I would.
deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500. As you look at the company you've created, how do you think you're having an impact on the world for the betterment of the world?
We are by far and away the best positioned entity to solve the question as to what does the human genome mean and how can you apply it to individuals.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Good morning, everyone. Bloomberg surveillance and inflation day. We're coming up on 2 hours away from the most important inflation report I've seen in ages and ages. Kaylee Lyons in for Jonathan Farrow. Lisa Bramwitz, of course, with us today, and looking across futures up 10, Dow futures up 74. The bond space. Lisa, let's do it right now. Curve inversion. There's the number on the Bloomberg terminal, negative 48 basis points.
It's shocking. We're bumping up against history here, and people are saying it could go even further. Does this mean that bad things are going to happen in the economy? And you get really unclear answers from people about whether there's this sort of depth of the inversion and there's any correlation to the depth of a potential downturn.
The operative word there is ambiguity. Maybe we see that in currency markets as well. On the holistic economy, on these inflation reports, and particularly with his expertise of the dollar, Mark Chandler is timely to speak to. He's chief market strategist at Bannockburn and truly legendary in the astrology, if you will, of piecing all this together. Mark Chandler, what does sustained high inflation do to the astronomy of the market?
Tom, I don't know. I think that it's not just the U.S., of course, that has high inflation, but the world's going through it now. I kind of think that, to your point about the importance of today's CPI number, I'm not so sure that's going to really change anything. After that strong labor data we had before the weekend, the market's pricing in about an 80% chance of a 75 basis point hike next month. And I don't think the CPI number is going to change that very much.
Is the dollar dynamics here playable? When you look at the noise, the David Rosenberg-like noise that's going to come out in the inflation report today, can an economist like you go over and make a playable bet on resilient, strong, or weak dollar?
I don't know if it's just so much on today's CPI number, but the thing that I'm focusing on really is that even though there's been this big rate adjustment, the spread between the U.S. two-year yield and the German two-year yield is at about three-year highs. And typically, that spread, that U.S. premium, peaks before the dollar does. So I'm concerned between the Italian election next month, the weather, this unusual weather, we should say, in Europe, drying up the rivers, also a new supply shock, as well as the energy costs. So I think that Europe is facing a couple of shocks in addition to that interest rate differential, and that could drive the euro back towards its lows.
Well, and that's actually something I've heard from an increasing number of analysts, Mark, that perhaps we haven't seen peak dollar strength at a time where the U.S. is still doing pretty well. How much did the employment report on Friday change that picture? Are people getting sort of, not false optimism, but overly confident about the healing of the global economy or the resilience of the global economy before they can see it actually happening?
Yeah, I don't know. I think Powell makes a good point that with inflation, there's one number we could the Fed could focus on, PCE, headline deflator. But when it comes to the employment market, we are seeing a lot of mixed signals. Weekly initial jobless claims are rising. We saw some weakness in some of the survey data. We've seen continuing claims beginning to edge up. The labor market is not as strong, perhaps, as the non-farm payroll suggested. But again, the labor market's a lagging indicator. There's many people who think the U.S. is already in a recession. I'm not one of those people, but I do think that between the yield curve, and I would point out that yesterday, it's not just a 2 to 10-year curve they're talking about, but did you see what happened yesterday? The 1-year T-bill was auctioned at the same rate that the 3-year note went off yesterday.
Yeah.
3.2%. And I think that really tells you, it's not, to me, it's not that it's reflecting a recession, but those changing in financial conditions make it more difficult for businesses.
I mean, Mark, hold on a minute. Lisa, was that auction talk with Bramo? Did I just hear that?
Well, it wasn't with me. It was with Mark, but it was very well done.
It was very well done.
I
admit it. I nodded off.
That was beautiful, Tom. That really read well on radio. You know, Mark, other than nodding off with the bond auction talk, there is this question about positioning right now and the fact that people are going into 3-year notes at a time when there are so many questions about rate hiking. Has positioning in the dollar made it more vulnerable to a rally because people have closed out their longs in this belief that we've already seen the peak?
Yeah, but I don't know if we've really seen that. I mean, of course, in a few currencies, there has been some adjustments. I think the speculative market in the futures are long Canadian dollars, for example, but they're still short the euro. They're still short sterling. They're still short the yen, even though not as much as they were before. I'm not sure positioning is the big block for the dollar right now. I think that it's really just a summer doldrums. And I think that as we get into next month, I think they will see the dollar beginning to strengthen again.
So what would be the concoction for dollar weakness, Mark? I mean, literally, what would it take in order to sap the strength of the greenback?
Yeah, this is what I'll tell you what I'm watching. I know we're all looking at the Federal Reserve raising rates 75 basis points next month, maybe another 50 or 75 before the end of the year. But when I look at the December Fed funds futures for next year, it's trading below the December Fed funds contract this year. That means the market's pricing in a rate cut in the second half of next year. And I think that as these forces gather steam, I think the market's concluding that the Federal Reserve is going to break something before they think they will. That is, that whether it's the labor market, whether it's the economy, things will slow down sufficiently between the end of this year, early next year, to put the Fed on hold. Some of my colleagues at ITC had done a study of how the lag time between the last hike and the first cut. And that's averaged around 10 months. So I don't think the market's so far off, even though the Fed pushes against it. We've seen some easing of financial conditions. I think that still seems to be a reasonable bet that by the end of next year, we're talking about cutting a Fed policy.
Mark, thank you so much. Mark Chandler with Bannockburn there, and it really resounds with what we saw from Bank of America and a chart getting us out into the summer of 2023 with elevated inflation. Yesterday, a surveillance edge of hysterical on the pipeline across Russia, moving into Ukraine and splitting into 3 parts from Latvia down to, I can't remember where, Lisa. They shut down the oil. Brent went up a stick and a half. And now we go the other way.
Well, we got a headline saying that Transneft is getting ready to resume the flow via that southern leg of the pipeline. And there had been discussions, or this had been really a Ukrainian-led shutdown, not a Russian-led shutdown, which was part of the reason why you saw oil getting lower today anyway. Ahead of this, there was an expectation that it would resume. Nevertheless, Tom, I do wonder what the premium is getting built into oil prices, because there is an expectation that Russia's going to play with the flows. I mean, this is going to be something that's going to happen through the end of the year. Perhaps this isn't the perfect example of this, but that is something that many people are expecting. So how do you get ahead of that? And how do you plan for it if you're a trader trying to game out the pricing?
And Kaylee, it's a calendar item. I mean, the heat's breaking in New York. We've gone from this ridiculous heat wave. Folks, 2 days ago, I've never seen in the Northeast, ever. It was like Virginia weather, Kaylee. It was terrible.
It was, or the swamps of Washington, Tom. It has been brutal, but it's also been brutal in Europe. And while we're talking about oil and gas flows from Russia, we also have to talk about the effect this heat wave is having on Europe's rivers. There is a point on the Rhine River that by Friday could become impassable for cargo. That is also coal, which Germany has come to rely on to a much heavier extent, given all of the concern around Russian energy flows. We're talking about climate change. We are talking about an energy crisis in Europe that could get worse because of it. And that does not leave the European economy in a very sound place.
Yeah, John telling me Central Italy and on down south has really been extraordinary the last couple days. We'll have to see what he says when he gets back as well. It's been really quite something. And of course, we're moving up here in 2 hours to the inflation report. I should note, Julian Lee, seriously, Dr. Lee will be with us here in the 7 o'clock hour on oil and on Europe as well, something important for global Wall Street. Lisa, Netherlands TTF, nat gas, the moving average of that is frightening. It's amazing, Lisa, how the moving average that I use on Netherlands natural gas is sharply above where it was when the war started.
Yeah, and what we've heard from Javier Blas, also of Bloomberg Opinion, has been that you've started to see Germany in particular transition away from gas and try to increase reliance on oil and on coal, as Kaylee was talking about. How quickly can they do that ahead of the winter? This is going to be a huge pressure point and a massive part of the inflation over in Europe. We're seeing that be a declining part of the inflation here in the United States. So then what takes over for it, and how long can you count on that as the disinflationary measure of the headline number?
John from the Hassler in Rome emails in. John, thank you for emailing in from the Hassler in Rome. And he says, why aren't you guys doing Italian spreads? I don't know, Lisa, why aren't we doing Italian spreads this morning?
Because he's not here and we're on strike. I mean, he's drinking
exactly.
espresso and having buffalo mozzarella, and so we don't have to look at it. Look, this has been something that we've all been watching as well. What's been going on with Italian yields versus German yields and how that's shifted around, especially after we have not necessarily seen the teeth of the European program of the ECB. They face a lot more problems in Europe, and that, I think, is basically the theme that we keep hearing.
In the last 24 hours, Danske Bank has done some really terrific work on this. And folks, it's important to understand on this day of inflation in the United States how different the European story is than what we see in the in America. Futures up 9, Dow futures up 65, and the VIX 22.26 this morning. Lisa, I want to go back to the bond market. We got to go back to this curve inversion story, and I guess the velocity of it can go right through. As I mentioned earlier, Ian Lincoln looking at negative 56 basis points.
I'm going to throw the Fed a bone. This could be actually viewed as real credibility by the Fed, in the markets at least right now. That people believe that whatever the Fed's going to do is going to work. And that's why long-term yields are coming down. And to me, that is my question. How long does that continue? Or at what point do people start pushing back, especially if they believe in this pivot of a Federal Reserve?
Well, we're thrilled you're with us today, this most important day. Michael McKee with a complete inflation brief. We will do that at 8:15. We've got a number of economists to attend as well. And then afterward, we will move on to the markets, and particularly on to important earnings in media. Michael Nathanson will join us here to finish out surveillance this morning. Coming up, Rubila Faruqi, chief U.S. economist with High Frequency Economics, our first brief of the morning on this historic inflation report. Please stay with us. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Former President Trump has legal issues on 2 fronts. He says that today he'll testify under oath in a New York investigation involving the value of his real estate holdings. That comes 2 days after federal investigators searched the former president's home in Florida. Republicans echoed the assertion that this search was politically motivated. In the UK, households are already almost $1.6 billion in debt to their energy suppliers before winter, and that's when bills are set to surge again. British consumers typically build up credit with their providers during the summer when energy usage eases. That limits the shock of higher demand in the winter, but soaring gas and power prices have made this summer that much more expensive. And several of Europe's major rivers are running dry, disrupting $80 billion in trade routes. Blame it on an arid summer that has set heat records across the continent. The Rhine has dried up to the point of becoming virtually impassable at a key waypoint that is slowing down vast flows of diesel and coal. And in South Korea, the city of Seoul is bracing for more rain after being hit by one of the worst storms in more than a century. Widespread flooding has killed at least 9 people in the capital. More than 20 inches of rain have fallen. Opposition lawmakers are criticizing President Yoon Suk-yeol for his response. College endowments in the U.S. declined the most since the global financial crisis. They lost a median 10.2% before fees in the 12 months through June. That's according to Wilshire Trust Universe Comparison Service. The largest funds, those with $500 million or more, did substantially better, gaining 0.9%. The previous year, endowments returned to a median 27%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehrad to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, today on Bloomberg. Brought to you by Workday.
We will never break. We will never break. Build on a foundation strong enough to stay. We will never.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. the Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Right now, it actually might be easier for them to continue to attack or at least try to bring under control this inflation issue while consumers maintain somewhat of a slowdown but still spending so the economy can get through this.
Anna Hahn of Wells Fargo on equities there, talking up inflation because that's what everyone is talking up. Katie Lyons this morning in for Jonathan Ferro, Lisa Abramowitz, and Tom King. We welcome you all to a most historic day. And let's talk about that because we really haven't said inflation now that you're living, top line core, trim this, trim that, auction adjusted according to Lisa, is a 40-year high inflation, whether it's 41 years or 38 years. Who cares? It's 4 decades that we haven't seen this inflation. Right now, what we suggest is it will roll over, and we can extrapolate out a path in the next year, except it hasn't rolled over yet. Maybe we'll see that here in less than 2 hours. Rubila Faruqi is chief U.S. economist at High Frequency Economics. Our first conversation of the morning to dive into the details. Rubila, what is the detail beneath the headline data that matters at 8:30?
You know, we all expect to see headline inflation decelerate in July. And, our estimate is a little more to the downside than it is than the consensus. But it's really about core inflation, and we expect to see an acceleration. It's all about rents. And what we see is a persistent push that we're going to get over the next several months. You know, our estimates show that rents shelter inflation is about 5.5%. It's going to peak at 6.5%. So that's going to keep the pressure on core CPI over the coming months. And really, it keeps the Fed in play on a very aggressive policy stance. Our estimation, our judgment is that we're going to see a 75 basis point rate hike. If we see a very negative surprise today, everything's on the table, a full percentage point as well. We can see 125 basis points through the rest of the year, slight upside to that, and maybe even...
What you just said there is outrageous. You're suggesting if the inflation report goes the wrong way, we may be jawboning 100 basis points in the 9 o'clock hour this morning?
This is exactly what we think. If all options should be on the table.
Okay.
If the Fed is expecting to bring inflation back down to 2%, growth is secondary, inflation is in focus.
Lisa, that's
And the labor market is really allows them, it gives them the leeway, gives them the runway to take action to bring inflation down, and this is the way they're going to do it. Base case is 75 basis points, but look out for a negative surprise on inflation.
Rubila, you said that you're a little bit out of consensus, and to put it into perspective, your 8.5% headline projection is the lowest among the projections that we track here at Bloomberg among economists. What are you seeing in terms of the decelerating factors that others perhaps are underestimating?
Well, it's just the energy component, right? What we saw in gasoline prices, what we saw in seasonally adjusted prices, what we look at, we think there is more downside risk from that to the energy component. And that just means that we have a flat reading month on month that brings the year on year down to 8.5 rather than 8.7. 8.5, 8.7 really doesn't matter because at the end of the day, an 8 handle on inflation, headline inflation, is unacceptable. And what we're going to see, what we expect to see on core CPI is moving from a 5.9 to a 6.2. So I mean, these are just not numbers that are moving in the direction that the Fed wants to see, and really, to keep track on keeping inflation or bringing inflation back down to target and keeping inflation expectations anchored. This is what they need to do.
Rubila, one feature of inflation that is sticky is a moving target, basically that the areas of inflation keep shifting, which is exactly what we've seen over the past year or so. How sticky are some of the increases that we're seeing in rents, in medical costs, some of these other areas outside of gas, outside of oil, outside of food?
And this is a very good point, right? This is what we're looking at. We're looking at medical care inflation, and we're looking at shelter, in particular rents, because they have such a substantial weight in the index. So like I said, I don't think, shelter is going to be a major factor. If we zero out core goods inflation and we keep, services inflation accelerating, we're still going to have inflation, core inflation, that's going to be well above target over the next few months. This is going to be sticky. It's going to have a lagged effect. It's not going to, the Fed itself doesn't expect PCE inflation to go back to 2% by the end of the year. We need to move in the right direction. And right now we are not. I mean, we're going to see headline inflation decelerate. We expect to see core CPI accelerate. That's not what the Fed wants to see.
Well, Rabila, in services as well, there is a wage component to that. And Tom was bringing up, rightly so, earlier, the 10.8% jump we saw in unit labor costs in the second quarter in data yesterday. How close are we to the edge of a wage price spiral?
It's difficult to assess right now. If the Fed is actually acting to rebalance the labor market, then we do expect to see a little bit of, demand to, we're not seeing it in the labor market data right now, but what we are seeing in the time lead figures, which is the jobless claims numbers, that we are seeing an adjustment in the labor market. So I'm not sure that we're in a wage price spiral right now. We don't really see it. But, this is something we are watching very closely because, like you said, unit labor costs surging, ECI at all-time highs, and, average hourly earnings moving in the wrong direction. We're just not seeing the deceleration that we want to see.
So, Rabila, in your best estimate, what level of unemployment are we going to be at when we see inflation back down near 2%?
It's really difficult to assess that because, if you look at what the Fed is saying, they're saying maybe the situation is different. Maybe we can bring demand down without really causing a big jump in unemployment. So it's really what we are seeing is we are seeing a decline in openings. We're also seeing a decline in hiring. So maybe we can see a rebalancing without bringing the unemployment rate too much. But it is our expectation that the unemployment rate is going to move above 4%. That's also the Fed's expectation. It's just that there's a wide range of uncertainty around that forecast.
Rabila, thank you so much for framing that. Rabila Faruqi with us there with High Frequency Economics. And again, folks, something we haven't talked enough about, which is higher statistics, greater inflation. And Lisa, the shock at 8:31 this morning of framing 100 basis points, I'm not prepared for that.
Well, if there is an upside surprise, how much do we end up with something like that being the conversation? But then again, the parlor game, I know you love it so much. We get the forward guidance that isn't forward guidance, that's just